capabilities and manufacturing capabilities required currently, more urgently, the way the market is ramping up.
Mr. Singhania, I'm very happy for you, but I'm saying this 5,000 crores target was done or given keeping in mind the Hisense deal, because you would have some sense of that. And I heard you mention that you will surpass those targets. Will you just barely surpass those targets in FY 27-28? Or do you reckon that there is a chance of a substantial improvement on that because of the Hisense deal?
I'll keep that open, but definitely we are looking at surpassing those numbers.
No, but even 5,100 is surpassing, even 6,000 is surpassing. I'm just trying to understand, is it barely surpassing or is it slightly better?
Surpassing substantially, definitely.
Substantially better.
Okay. The market definitely seems to be in the right track.
You don't need any capital raise for the same, right? You are adequately funded, or do you need to raise some equity capital?
Currently, we're adequately funded.
Adequately funded. Okay. Well, very good deal. Remarkable. Congratulations, Mr. Singhania. Wishing you all the best for this.
Thank you so much. Thanks.
I don't know whether you were trying to corner him or he was.
No, cornering. It's just see. It's a great deal for him.
Yeah.
Because at 1420 crores, Samina, March 24, they're talking of 5,000 crores. That's trebling revenues in 4 years. Let's say, right? Trebling revenues in 4 years, and this deal helps them surpass that, and it's done at the same margins. 250 crore of investment. He's saying he'll probably garner a top line of 2,500 crores. It's quite remarkable, this deal. No wonder the stock is locked on an upper circuit.
And I guess production, like he said, starts in Feb or March 2025. So it's a big facility that they're putting up. This is a big, big deal for the company, and of course opens up a whole global market share that they could potentially gain, not just over the next 3 years, but consistently grow as it goes along. But of course, it's getting closer to 10 a.m. and it's all eyes on Hyundai that will list in a few minutes from now. It's a mixed bag. The grey market, which was trading at a discount, has now finally moved to a premium this morning. Puneet is standing by with what should we expect, and then Astha joins in to talk to us about the listing itself. Puneet, first over to you.
Well, thanks for that. So, as you rightly said, the grey market premium has, got into the positive this morning. And the fact remains that it is India's largest IPO. So we have a couple of brokerage notes as well that's come in this morning before even the listing has happened. So we have Nomura. They have initiated coverage on the stock with a target price of roughly about 2,472 rupees per share. And that's almost a 20% upside from the current market levels. And what, the brokerage has been saying is very key, because they have said that, Hyundai has been able to predict the consumer shift that happened towards, SUVs back in 2015 as well. So from just about 13% SUVs, it's moved to roughly 67% of SUVs now for the company. And they expect that the company is also poised for long-term growth with SUV mix of about 67%, with improving average selling prices, every year, as well as the improving market share of the company, currently around 14 to 15%, which is a number 2 player. They've also said that, having an Indian management over the last 2 decades has been one of the key things as well, and a key advantage for the company to adapt to the local market. And they are also best positioned in the passenger vehicle space to handle any kind of tech transition that might happen, which we have seen over the last decade as well. Now, they're estimating the company to deliver about 8% volume growth CAGR over the next couple of years until FY27, and that will be driven by 7 to 8 model launches in this particular time frame as well. They're also expecting that, for overall EBITDA margins will improve to 14% by FY27 versus 13.1 that I reported for FY24. We also had another positive brokerage note coming in from Macquarie this morning. They also have a buy with a target price of 2,235 rupees per share, 14% upside. And they have mentioned that, Hyundai's market share has been, in the compact and mid, SUV market has stabilized and will improve from year on as well, despite significant competition from the likes of Tata Motors as well as Mahindra and Mahindra. They've also mentioned that, they've outperformed its sister company Kia as well in this particular time frame with the models such as Sonet and Seltos for Kia. And they are also, Maruti is also currently facing risk. Lower market share, about 37% for YTD FY25 as well, because of model sharing with Toyota. They are anticipating that, over the last 5 years, it has, higher realizations compared to Maruti as well. And specifically, they mentioned that, over this particular time frame, that they believe Hyundai deserves a higher price to earning multiple when compared to Maruti Suzuki. That's also because of premium pricing and better models compared. So finally, what they expect, they're estimating a 12% PAT CAGR between FY25 and 27 for someone like a Hyundai, and also implying that roughly about 25 times price to earning for Hyundai, which is a 15% premium for versus compared to Maruti for FY27. So overall, a very largest IPO listing today. It'll be interesting of what it does to the other listed players as well and how the strategy changes. Back to you.
Right, Puneet. Thank you very much. The world is watching. In fact, I saw a couple of the global headlines across global publications where it said that investors will be closely eyeing Hyundai as it lists on the exchanges today. Astha Jain, Senior Research Analyst of Hem Securities, are joined in. Astha, good morning. Thanks for joining in. Astha, what are we expecting? We've been swinging between losses on the grey market to gains this morning. Where are you anticipating the Hyundai stock to list at this morning?
Hi, good morning to all of you. So talking about this counter, first of all, what we have given as the recommendation was a subscribe from long-term point of view, not from the listing gain point of view. And there were few factors that were behind those recommendations. First of all, we didn't like the valuation because the valuation at which the company brought the IPO, we think that they have left nothing for the investor on the table. So that was not to our liking, and that's why we were not expecting any sort of a listing gain. Another point is that this is one of the biggest size IPO we have seen, and in the history we have always seen when such kind of biggest size IPO came, except Coal India, I think none of them have been able to garner any kind of listing gain premium. So that was another point which was really not allowing us to give it for the listing gain perspective. Now talking about this counter, what we feel for this listing, what I feel at this juncture of time, this listing may be at the issue price or something below than that, not much, because I've always been saying these to my clients on the various channels that the kind of subscription which this IPO has garnered, only strong hands have put in their money into it, because they know in case of any fall on the listing, then they will not come for selling. So these are the strong hand, and when some strong hand subscribe to the IPO, then the supply will be very less. This is what we believe. And I had this point in my mind at the time of IPO recommendation also, maybe the supply crunch will be there, and that's why the issue will be able to maintain its IPO price or the issue price, as well as might be some discount can be seen, but not much premium. So now my idea here is the kind of momentum we are seeing in the market. In fact, the markets was also not good. When this IPO came, the market conditions were not good. And even we have seen Maruti has corrected a lot. So keeping all these things in mind, we have given it subscribe for long-term rating. Now, what we are expecting as a listing, we are expecting the listing to be somewhere at the issue price and minor lower than that. But I think in the later course of a business, I'm keeping my fingers crossed while I'm recommending this, but in the later course of the business, it should settle somewhere near the issue price or some more premium like that. So now what should one do who have not applied in it? They should wait for some correction. Maybe 1840, 1850 is the good level to make an entry into the counter, if at all it will come to those levels. And those who have already got the allocation, they should keep it in their long-term portfolio, because after all, Hyundai is a brand. It is a #3 company at the global level, and all big funds have they put in money into it. One thing which I want to draw your attention towards is that BlackRock and Fidelity, these are two funds that they never, and they come very, frequently, not they put their money into any big IPOs in the Indian market. So they come very less, and big funds have their interest into it, because after all, it is a brand, and they have put in into Hyundai India, which is a looking after the Indian growth story. So I think this IPO will not fall much. I mean, the issue price, it will settle somewhere near the issue price, or a minor dip can be there. But we are recommending to buy it at the lower end of around 1800 to 1850 odd levels.
Also, so the 1800 to 1850 levels is looking like a good entry point. The price discovery is underway, and it seems like the listing is going to be at a discount. 1931 is what we're expecting versus the listing, the subscription price band of 1965. While you're at it, Astha, so clearly don't expect listing gains. What you should do is look at the stock from a long-term structural strategic portfolio buy, and if you couldn't subscribe to it during the listing phase, today may be a good time to add to that stock, is what Astha believes. Astha, while we have you, we still have 2 minutes to go before we hit the listing. A quick word on Waaree Energies. A phenomenal subscription, oversubscription on the very first day, both on Waaree and Deepak Builders. Quick view on that.
So we are recommending Waaree Energies because the kind of business they are into, it is very hot right now, manufacturing solar PV module cells. And the company is one of the biggest company into this space. In fact, few months back, Premier Energies IPO came. But this company is double the size in case of profitability I'm talking about, in case of the installments and the capacity installed they are having. So I think this is a very good IPO to invest the funds in. We are recommending it to for the listing gain as well as long-term purpose. Talking about Deepak Builder, it is a very small size IPO, and such kind of IPOs may garner some sort of listing gain. So we are recommending both the IPOs for the listing gain as well as long-term perspective. But our major choice or my first number choice is with Bari Energies at any point of a time. So we are strongly recommending this counter.
One quick follow-up there, Asta, on Vari. Let's say, what is the 2-year outlook like? I mean, you are sounding very constructive there. People subscribing to the IPO. What should they watch out for? Listing gains or holding gains?
So, Neeraj, as you know, most of the retail investors, they only look after listing gains.
Which is why I'm asking this, yeah.
Yes. So for those retail investors, if they really can wait for the long term, because some new capacity is going to come within a year or a two. And I mean, these capacities are on a very good technology base that this company is coming into. So I think if they can wait, then definitely it will be a good long-term portfolio candidate also. So my idea is for the retail investor, book partial of it and keep the partial quantity in the long-term portfolio as well, because I think in the long term, it will yield strong returns.
So one final question, Asta. Circling back to Hyundai or Hyundai, however you want to pronounce it, but I'm calling it Hyundai. So circling back to Hyundai, would you believe that there are other auto companies which are better bets? I don't know if you track autos per se or only IPOs, but let's assume that you're looking at Hyundai versus its peers. Is Hyundai a better bet if it starts off lower today as it seems to be? Or are there other auto companies, four-wheelers, which are better bets?
So if anyone want to bet in only the passenger vehicle market,
exactly.
that is the car market,
exactly.
is only Maruti. And I tell you one thing, these global funds, they are always looking for such kind of strong growth story which India is giving them. Otherwise, they would have put their money into the Hyundai global company also. But looking after the growth story of India, I think they have come into it. So I think we should give this also a chance. And if someone keep both the counters, that is Maruti as well as Hyundai in their portfolio, so they are almost getting 55% of the market share in the passenger vehicle market, because these two together constituting of around 55% market share. My idea is, so if anyone lose the share, then it will be the gain for others. These are number one and number two. So I think both these counters are looking good to us. And I'm not comparing it with the rest of the peers, because in the car makers, I think these are the two competitors. So I think one can look after Maruti also. So these two are such counters that one can keep both of them in their portfolio. After all, Hyundai is a brand and it is a global level brand. So I think everyone wants to keep such kind of auto company in their portfolio.
Thank you, Asta. Good talking to you. It is still the preferred bet is Maruti, but in a few seconds from now, Hyundai will be listing on the exchanges. The expectation is it should be getting listed at a small discount. But there's a good chance that investors who didn't get their hands on this IPO in the subscription phase may actually look at allocating incremental capital to the counter. So a good possibility that even if it gets a flat start, there could be a good chance that it may end the day on a positive note on back of buying action that could emerge in the day. It is now finally have listed peers to compete with directly, the likes of a Maruti, who do appear cheaper on a valuation front, and M&M, which promises stronger and better growth. But it's taken it 26 years to in India to finally hit the market. They're waiting to ring the bell, but as you can see, it's a good sort of diversified senior management of Hyundai. And as the street would have, okay, so there you go. It did start off negative and it's charting its way in a positive territory. Exactly what I thought it would do. This is not too bad. Flat start. The buying could come in over the next few hours. Investors who haven't got their hands on it may look at acquiring it. 1965 was the upper price band of the subscription. The opening is rather flat this morning, but not as bad as the 3, 5, 7% discount that we were or have been seeing in the grey market premium on the counter. Settling around 1940 is what we had. The much talked about 27,000 crore IPO that opened in the markets, the largest of our times, is what we have. Neeraj, I don't actually know how to react to this.
Yeah, now slipping, Samina. Let's cut that audio out, but now slipping. Hyundai, 1.792%.
Let's also see what Maruti is doing while we're at it. Just if you can get also Maruti next to that or somewhere on the side. It'd be good to tell how the companies. There are positive brokerage reports, and everyone's constructive on the stock from a long-term holding investment. No listing gains. There'll be a little disappointment, no, Neeraj, for the 2.5 times oversubscription. I know that the retail participation was muted, and QIBs who have, of course, oversubscribed can't exit the stock anyway on listing day. So I guess there is no disappointment because retail participation was anyway muted, to say the least.
Yeah, so for retail, maybe not as much. Samina is absolutely right, and we'll get in Ajay Srivastava in moments from now to get his comments as well. But on Hyundai, as Puneet mentioned, like for example, today, we've gotten a note from Nomura as well as from, I think, Macquarie, if I'm not wrong. And they have said that they have initiating this with an outperform rating and in the target price of 2235, which implies a 14% upside to the issue price at the upper end. It's not moving thus far, Hyundai, in any fashion whatsoever towards those prices. It's a large IPO. You would argue a successful IPO because it's gotten subscribed all well. Now let's wait and watch over the course of the next 12 months. Does it do better or no, Samina? Any guesses?
I think it'll, a year out, I think the price, actually this is such a tough one because it's not coming at a deep discount, right? It's coming fairly well priced, but there is a good possibility a year out the stock will be trading higher than its issue price, but only because the growth trajectory looks strong. Electric vehicles is the big play, and in the last couple, and they also have very healthy margins. So industry-wise, their margins are healthier than its peers, even though there has been a slight decline of the auto majors, including Maruti and Hyundai, in terms of market share. But very aggressive expansion plans. They're sitting on 15,000 crores of cash, which will be invested in new sort of innovation in that sense. Ajay Srivastava, do we have him ready to get a quick view on it? Ajay, good morning. I'm going to sort of barge into your talking point conversation with Neeraj and have you a quick question with you on Hyundai's listing. Do you think the price on Hyundai 1 year out will be higher than its listing price today?
I don't think so. And the only reason it might get higher in the middle is because there's no retail participation. So you will find some HNIs, some portfolio balancers coming in to buy it. But I do not believe that this price should be higher 1 year down the line, given what economics are. And given the way it's been a pure just OFS at the end of the day. It's not the money going to the company to set up a new plant, expand anything. So, and number three, that if you look at the philosophy of the investor, they pulled out the dividend right before the IPO. All the cash already, 40% of cash was pulled out at that point of time. But it tells you the continuing philosophy that's going to happen is that this is going to be bleeded out for the parent at the end of the day. That's what's going to be. They've just used it to list the company, take the money out at the end of the day because we have a higher premium in the market. It's not that the money was kept here to grow the company, buy ancillaries, build businesses here. It's going to be a continuous process of money out to support the parent company. So I think investors will want to say, initially there may be some amount of upside because nobody owns it in retail and HNIs and so on. But eventually it'll come back to toil and see what happens with promoters and companies like this who just encash the market and walk away with the money.
Okay, point well noted. Ajay. Ajay, stay on.
Good morning, Yash.
Yeah, good morning. We need to slip into a break, in fact, wrap up India Market Open. But talking point today is with Ajay Srivastava. Stay tuned, we'll be right back.
I would like to congratulate NDTV on its World Summit 2024. This morning, the Honorable Prime Minister inaugurated the session, and it was a very inspirational talk by our Prime Minister, talking about not just India's role on the world stage, but also how India can play a role in the entire humanity across the globe. How India's aspirations can be the global or the world's aspiration. I think Indians have taken a lot of pride in seeing how India has been built in the last 10 years. Watching Prime Minister extol the virtues of what has been achieved and what lays ahead for India and the world was truly inspirational.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The case for a chat today. China wars continue as FPIs keep out, or could that change? Will the pullback move continue, or rather will the pullback, or rather the drops continue amidst a muted Q2? Will cement stocks consolidate further? I think a lot of questions, and the answers to some of these with Ajay Srivastava. He joins in right now on Talking Point this time. Ajay, great having you. Thanks for joining in. Ajay, it's an interesting thing. He was talking about how the outflow from EMs like India and some others have gone to China month to date. It's actually not even the Chinese markets which have gotten flows, it's Japan. So what's happening really in terms of global flows, you reckon?
I think I'll tell you a little later in November, because just after Diwali, I'm traveling to Hong Kong and China. So to get a first-hand feel of what's happening in those markets and companies. So I think I'll be in a better position to tell you. But I think what I can tell you is as follows, that everybody is wary of China at this point of time. And everybody is wary of the results which are going to come out after November 5th US elections. If Trump wins, it's going to be war with China on the economic front. And I think all the FIs, by and large, at this point of time, as I talk to them in the US, are going to wait out to see what happens on November 5th. If Trump wins, is China traders off the table, immediately off the table, and you see a pull out, in fact, of funds coming out of China. If Trump loses, you will find that money will start to go back to China. So I think it's going to be wait and watch till the US presidential election. Having said that, it's so difficult to make money in China. You don't know what's happening to the companies, the accounting books. If you read some of the balance sheets of the companies, literally very difficult to understand. And the political, you saw what happened to Jack Ma, the global poster boy. Immediately he's gone back to, I believe, a teacher now. I think that's what I'm told. So I think, given the political imponderable and the US elections, I think one should just wait to see how China plays out, and on the contrary, one should wait and see how India plays out, because particularly the pharma market of India, if Trump wins, is going to fly like a rocket at the end of the day. So China's story, I think, is wait till the US election and then take a call as to what happens. If Trump wins, of course, China investment is off the table.
Got it. So, okay. Having said that, the essence, Ajay, that I'm trying to get to is that the way FI inflows have a limit after which they stop. What about outflows? It's not that FIs were seriously overweight India, right? I mean, I think 16.2% or thereabouts was not overweight position in any fashion whatsoever. When does this bout of outflows stop? It's a guess. It's a hypothesis. I'm asking you to make one. When does it stop, and why, and what could lead to it stopping?
See, there has to be a meaningful correction in respect of the share prices vis-a-vis the earning potential. And that's what is holding back and continue to see the outflow is that, how do we make returns on a country where our companies are growing less than 5% but the Ps are at 40s and 50s? Indian companies by and large should be at P's of 15, 20, 25, most of them, given their growth trajectories. We are at P of 40, 70, 80, and we see listings at 100 P's and 80 P's and so on and so forth. It's a ridiculous, absolutely ridiculous. So I think if you forget FI, even if you're a domestic investor, a lot of the good investors who are already invested would have not invested too much in the last 6 months in this market. On the other hand, you're finding that the risk issues coming from West Asia are giving gold and silver the boost that they always had. For the first time, I can see the talk chatter when I meet people is no more about equities. Yeah, we missed the gold thing all about. Gold was supposed to be fuddy-duddy. It's what your mother told you. And I'm grateful to my late mother who told me this advice, to saying, whatever you make 10 to 15% put in gold year on year at that point of time. There were no gold bonds, so it's buying physical gold. And I think now a lot of investors realize that their portfolios are unbalanced. They don't have any gold, silver in their portfolios. And so you will see in the next 6-9 months that rebalancing will continue. People are going to get out of equities or not invest surplus in equities and try to build back gold. So even FIs are doing the same thing. They're going into commodity, they're going into gold, they're going into silver futures at this point of time. And therefore, this rebalancing has to continue till our share prices become more realistic and realizable in context of our economy and growth. So I don't know when it will stop, how much it will stop, but I certainly believe both domestically and internationally, the big rebalancing into gold and silver is now on its, I think it's on the first big leg of happening. People are now committing larger and larger capital to gold and silver, and including debt securities compared to equity market. So balance, it's not just about your equity market, it's also about what's the potential return in gold, silver, and debt securities.
Yeah, that's true. Well, certainly an important point and something that people should take note of. Okay, just a small detour in this conversation, but we have to do that because NDTV Network has taken a giant leap with the formal launch of the new product NDTV World. Let's cut across to Mustafa Wajid of Billion E and Gagandeep Sethi of Pernod Ricard, who are speaking at the summit.
Urbanized transportation. Now, whether this billion comes in a year or in cumulatively over 2 years or maybe even hopefully in a month as we go forward, this is something that we will see. Just to mention one thing, India's transportation requirements have multiplied by 3 times in the last 10 years. It's normally assessed in what we call as ton kilometers. And if you see the government publicate reports on this, 10 years ago we were at 1 trillion ton kilometers. Last year we crossed 3. So it's growing faster than the GDP. And that's because of increased urbanization, increased, I would say, consumerism, and also the e-commerce sector is also contributing to it. So that's something that we need to remember. And at Billion E, we would like to see how to reduce not just the decarbonization, but also make this transportation more sustainable. Thank you.
You can, of course, watch this entire conversation live on our social media handles as well, all through today too. But Ajay, coming back to the conversation, it's an important point you raise, rebalancing of portfolios. Now, the last 3-4 years, people have been all equity, all through and through. Now, let's assume people are rebalancing. There is pain in the mid caps and the small caps in the last few days. You reckon that will continue, or at some point of time, some high quality mid caps will get bought into, Ajay? Because this quarter, Ajay, I've heard dichotomous statements, right? There are companies which are talking about not a great number today, but we were talking to EPACK Durables, an EMS player, who's just told us this morning that from 1,500 crores of revenues in FY24, with a new deal that they've signed with Hisense, he expects to go well over 5,000 crores of revenue by the time FY28. So that's a 3x jump in revenue in 4 years. That's quite stellar, really.
Well, I wish I could be the same, seer who can predict 4 years. Okay, believe me, I can't predict what's going to happen to my life tomorrow morning. 4 years is too long a time. I like to live my life peacefully, saying this year what I'm going to do for my life. 4 years, okay, maybe so, maybe not so. And on all the boards that I work with and I represent, I think one thing I really dislike is CEOs telling me everything is going to be very good 4 years down the line. But you know what? Current year is a problem. Dude, you can understand what current year is going to look like. You're going to tell me 4 years is a certainty. Current year is the uncertain element. This is the standard talk that you hear in investor community, in the boards of the companies. Every single CEO tells you the same story. This year I do not know, but third year from now, I will grow at 40%. So I would take it with a pinch of salt at the end of the day. And as you asked the mid-cap, see, mid-cap stories are meant to be ridden up to a point and then you're off. They are flavors. They are a trajectory point till the price is discovered by the market. Once price is discovered, then your ride becomes choppy, then it's performance driven, then you've already taken that. So, so the game of mid-cap is all about changing horses, jumping horses. It's not about trying to ride the same horse till sunset comes. That's only happens in westerns where the hero goes into the sunset. In mid-cap, if you go into the sunset, you're going to lose terrible money. So I don't know if I've answered a question. The question, the answer is that if you've ridden a good ride with the mid-cap and you're seeing high PEs, and there's no way the company can grow at 70, 80, 60% in the next 3 years, you need to get off those mid-caps and move to newer stories. Good part, India's IPO has given you a lot of newer stories, a lot of new discoveries are coming into place, and therefore some are good quality long-term stories like aviation, hotels, which give you a continuous trajectory. But mid-cap, you need to get out of the horse. It's a galloping horse. You have to get out, ultimately book your profits and move on. One in few may go on to become a mega bagger and so on and so forth, but three which can cut you halfway or both can just kill your returns. So my advice always in mid-cap is, you made a good return, you rode the first ride, second ride, now get off, let somebody else come in place, but you need to find newer horses. It's a tough game, but it's a game of newer horses.
Okay, fair call. The point well taken. The theme that was expected to start post the new government coming in is infrastructure. We've seen a clutch of order wins, not necessarily very large ones, but decent ones for the mid-sized companies as well. I heard you say mid-caps are a flavor. Are infrastructure mid-cap companies a flavor, or is that something that you're looking at slightly more constructively?
No, we have got investments in particularly two large mid-cap infrastructure companies. We have got investment, and they are primarily debt-free companies. That's one of the key things we look for is, if an infrastructure company, you got debt, you got a problem. So I think the first criterion is, as long as the company remains debt-free, these infrastructure development companies are going to do well. The moment they load up the debt and they start to take primary risk on the projects, you got a problem sitting here. And look at the other context of infrastructure, the power sector, the end companies which are robust, which are the, people like NTPCs that I'm not saying recommending any name, but I'm just saying the end power generation companies, the transmission companies, including a REIT, which has done so remarkably well for us in our investment portfolio for years, which is a transmission REIT. I think those are the places where you have better and easier, simpler plays to happen with quite a quality return with less uncertainty. So the way I would play infrastructure is go for the power sector on the generation side, transmission side, go for the infrastructure on MNC companies, which have got proprietary technologies to come to India, whether it's in sustainable environment, whether it is railway coaches or engines, and so on and so forth. So I think for Indian infrastructure mid-cap companies, the bar is going to be very high, and our bar is they need to be debt-free and growing at 25% per annum. And there are only two companies which have qualified for it so far. They've done reasonably well, but beyond that, I think it's anybody's game that what this company can do, cannot do. Debt will kill these companies. And pure execution companies, civil construction, that's a disaster. You've seen L&T's construction. If L&T is making 2 to 3% margin, can you imagine what a smaller company will do? So I don't think it's a place where you want to put your money in smaller infrastructure companies. And a lot of them do a lot of civil work, which is a 2 to 3% margin business.
Okay. Well, and what will feed infrastructure is cement. So, let me try and get in, or let me get in my colleague Mihika, who talks about the big cement deal that has been announced this morning, and then we'll get an Ajay Srivastav's view on the same. Mihika, the Ambuja acquisition of Orient.
Good morning. So Ambuja recently in the morning has reported that it will acquire 46.8% stake in Orient Cement. Now the entire acquisition value is at 8,100 crore rupees and will be funded totally via internal accruals. Now the company will be making an open offer for Orient Cement at a share price of 395.4 rupees per share, which is at a 13% premium to yesterday's close, and it would trigger 26% of public shareholding. The acquisition will add 16.6 MTPA of capacity to Ambuja and will take its operational capacity to 97.4 million tons per annum. A little bit about the deal. When you talk about just the cement capacity that Orient Cement has of 8.5, the deal is valued at $114. But when you talk about, when you take into consideration operational cement capacity as well as the potential capacity. The acquisition, is valued at $58 per ton, which is lower than the greenfield setup cost of $110 to $120 per ton. A little bit about Orient Cement. Its current cement capacity stands at 8.5 MTPA. It also has ready to implement capacity of 8.1 MTPA and a clinker capacity at 5.6 MTPA. The potential cement and clinker new capacity stands at 6 and 4 MTPA respectively, and the company has presence across Telangana, Karnataka and Maharashtra. When we talk about benefits for Ambuja Cements, well, it helps Ambuja increase its presence in the south and west of India, and it can increase its pan-India market share to 2%. And Orient also has large size, high quality limestone in Chittorgarh, which will support the North India capacity of 6 million tons per annum. There's also acquisition will also help improve the overall return of capital of employed for Ambuja Cements. Lastly, when you talk about benefits to Orient Cement, well, the opportunity will improve operational efficiency because of a higher green power mix and domestic coal linkages. It also could lead to a clinker cost reduction potential of 150 rupees per ton, which helps the company achieve its rupees 1,500 EBITDA per ton target by FY28.
Thanks for that, Mihika. Ajay, consolidation seems to be the name of the game here. But the top two are now taking a serious lead over the others. What implications for investors on the space?
Investors is stay out of cement, continue to stay out of cement, remain out of cement. Look at the capacity addition in the market. It's if you look at this economic, it's a purely undifferentiated product. By and large, I don't think you care that your house you bought was made of Ambuja cement or XY Ultratech cement. I don't think you care a damn about it. Quality is almost similar. Its capacities are going up in the market. There's no differentiating aspects to this product thing. It's linked highly to infrastructure, real estate, which is okay, nice, but the capacity expansion, everybody expanding 30, 40, 50% capacity. Where do you take the price up? How do you create a positioning in the market? This is classic, absolutely classic, uninvestable kind of an environment for a product at this point of time. There's so much happening in this country, differentiated products, differentiated new industries, new EPACK companies. Why would you want to go to the old fuddy-duddy cement, which is not going to give any return? It has not given a return in 5 years. It's not going to return next 5 years. I can tell you this much. You consolidate, you pay. Why are you consolidating? Because you think you're going to get market share. You're going to get a little bit. The other guy is also big enough. And the best part is all players are big enough. And therefore, each of them can increase capacity. Each of them can price you out of the market. So I think it's one of the games where an investor is always losing in. It's nice sales size for a promoter, but for an investor, I'm not sure it's the right place. There's nothing there for you, my friend.
Okay, avoid cement. That is Ajay Srivastava's call. And standard disclaimer, of course, we spoke about Ambuja's acquisition of Orient. NDTV is owned by the Adani Group. So keep that in mind. Okay, final question, Ajay. In a skittish market, where is it that you find favor? Could banks do the trick? There are a lot of reports on that, and HDFC Bank's results yesterday seem to have induced some of the bulls.
Well, it's strange that no one talks about it, but the trigger in the big banks is not, we are not looking at banking as a trigger, is all the other subsidiaries they own. Whether it's the AMCs, whether it's the insurance companies, whether it's the life insurance, health insurance companies, whether it's a financial services company. If you look at it, what we see, the net accretion in value in these banks, which are holding companies, literally speaking, will be significantly higher because what's happening down below in the investment companies. To the point, in 3 to 5 years, these will become significant drivers. And hope and end that someday regulation changes and these become demerged companies. But the game in banking, and it's really the game in top two banks, really speaking, is the underlying subsidiaries which are going gangbusters. You can directly invest in few of them, which are like the AMC of one bank and so on and so forth. Some places you can't directly invest in it directly. But the trick is that these banks, as they become a holding company for something which is growing at 30, 40%, like the AMCs, the insurance companies are growing at 20%. Therefore, lot less is talked about is what's happening to the investment subsidiaries. You saw HDFC Bank is going to come with an IPO of their financial services companies. It's going to be 1 lakh crore. It's not big in terms of their market cap context, but it is significantly large value accretion for investors. So I think it's going to be a good story for few banks who are in non-banking activity in a big way. But will it beat the market? I doubt it very much. Will it be a top stars return? I doubt it very much. Yes, they're good part of the portfolios. They must be there in the portfolios. But if you can invest directly to the subsidiaries, so be it. But I can tell you one thing, that value accretion will come from below the subsidiaries, not on the banking. These banks are facing a tough call, as you and all the smart investors saying, either give me high interest rates, or I move to capital market, or I move to gold, as we discussed. So therefore, come match my returns, and then you'll find it. If you match my returns, your loan portfolio has a problem. So banking itself is going through its crisis. You've seen what's happened in the US. All the revenues come from trading revenues. If you see commercial banking, retail banking revenues, almost zilch. What is making money is investment banking, trading revenues. Nothing going to be different for Indian banks. They're going to be very commoditized in lending, but value-added services will pay the premium. But unfortunately, your returns will be suboptimal. Even best is to do an index, you'll make better money than investing in these banks.
That's a valid point. I mean, and India used to be a nation wherein FDs were the holy grail. That is turning, and some high believers have turned, some others might turn as well. Ajay Srivastava makes a telling point. Ajay, so good having you. Thank you for taking the time now. And talk to you very much. Talk to you maybe in or around the festive days, Ajay.
Oh yeah, once I come back from China, definitely I'll talk to you.
Sounds good. Thanks, Ajay.
All
and
right,
viewers, thanks for tuning into this edition of The Talking Point.
At the NDTV World Summit, and looking forward to a conversation between two amazing investors, Mark Mobius, Ramesh Damani. Gentlemen, what are you planning to talk today? I would love to not be the fly on the wall, but be in the audience as well. Ramesh, you want to start? What are you looking forward to?
Sure. Thank you, Neeraj. Lovely to be here, of course, and it's such a great honor to be interviewing Mark. He's been variously called the Indiana Jones of emerging markets because he's always traveling, living out of a suitcase, but always discovering very exciting companies. So I want to ask him about two things, basically. First, what did John Templeton teach him? Because that was his first boss. And secondly, what does he feel about India? A few years ago, he was very bullish on India. Does he continue remaining bullish, or does he feel a bit let down now? I want to get his opinion on what is going on in India.
Yeah, we'll hear that in the interview, Mark, but quick 20 seconds. How do you feel about India? How do you feel about this summit?
I feel very bullish on India and continue to be bullish. As you know, it's been the last 5 years or more I've been bullish on India.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matter.
Hello and welcome. You're watching the F&O show. Over the next half an hour, we'll take you through all the action in the F&O markets. As much as it's a tough market, we'll try and see where there are opportunities for you to trade on. We'll of course take up queries as well over the next 30 minutes. So if you want to ask the guest any of your questions, please feel free to do so. The markets not being able to hold up, and I think that continues to be a problem. The bulls on the losing end once again. Very volatile. 24,800 is where we trade at, just below that actually, 24,662. So we've dipped, broken 24,700. Indeed, Agam, when I started India market open this morning, and I did ask you whether 24,700 would hold.
Yeah.
It's not holding just yet.
It's not holding, and well, unfortunately, we are heading lower at the moment. It does seem like that, because what we are actually looking at now is there could be a potential of the Nifty to test 24,500, where we have a couple of well, important moving averages. In fact, the 50 DMA is slightly below that mark. We have a lot of writing of puts around 24,500, and you know, at the moment, even if you consider the the previous 7-day volume weighted average, that comes to somewhere around a little higher than 24,500. It's about 150 point move from current market levels, which isn't much. So if we do in fact see that breach, we're certainly going to see another bout of, well, declines coming in. Now, as far as the day today is concerned, let's take a look at whether or not we're actually looking at fresh shorts into the system for the Nifty and the Bank Nifty, see how futures are panning out. And even though over the past few days we haven't seen too much change in the open interest of futures, well, we'll just have to see whether today is that day where things turn. And it does seem like it is turning. We are looking at a 2% increase in open interest as far as the Nifty futures go towards what potentially looks like shorts right now. The Bank Nifty, on the other hand, also is something that is of importance, but that one isn't looking at too much change here. Sure enough, a little bit of unwinding, but it's marginal. So again, that's something to take stock of. But moving on, let's take a look at the constituents of the Nifty 50. It does seem like it's a day where we're seeing mixed trends coming in. So, you know, you will have, well, some names which are actually trying to counter the, well, the gains are coming through. So we do have ICICI Bank and HDFC Bank. And of course, we're going to continue to keep an eye on that.
I'm going to have to interject you right there. It's Hyundai, that is listed today, and Tushar isn't, of course, covering the management conversation for us. Tushar, over to you.
Post the IPO, and what is the kind of out of the capex that you spoke about, what's the kind of investment that's going to go into R&D? If you could elaborate on that as well. Thank you.
So look, if you see, we have the our R&D is done at the Namyang Center in Seoul, and that's a very key part and a key differentiating advantage which Hyundai has, Hyundai Motor India has. Regarding the royalty, we pay a royalty of 3.5% of the revenue, passenger vehicle revenue, to HMC, and in lieu of this royalty, of course, we get all the cutting edge technology, electric vehicles, future technologies as well, the use of brand. Post IPO, we believe that this royalty payment will remain the same. It is not going to increase, and so that is one. The second is, of course, the Namyang R&D Center. It coordinates with the local R&D center. Like, for example, we have our HMIE in Hyderabad, the R&D center. You would have already seen that we have already announced that we are going to improve the capabilities of India in terms of R&D. So I think that is a very critical part of the way going forward for us. Thank you.
गर्ग सर, NDTV प्रॉफिट हिंदी से लिस्टिंग के लेवल्स पे आपकी क्या प्रतिक्रिया है, इनिशियल रिएक्शंस क्या हैं, अगर आप थोड़ी बात कर पाएं तो।
तो देखिए, बिल्कुल एज मैनेजमेंट हमारा हमेशा से ये उद्देश्य रहेगा कि हम अपना बेस्ट करते रहें, ग्रोथ, कंपनी को ग्रोथ के पाथ पे ले आते रहें, इनोवेशन करते रहें, नए प्रोडक्ट्स मार्केट में उतारते रहें, इलेक्ट्रिफिकेशन करें, जिससे लॉन्ग टर्म शेयर होल्डर वैल्यू रहे। ऑफ कोर्स प्राइस हमेशा इन्वेस्टर डिसाइड करेंगे, और एज मैनेजमेंट हम हमेशा कमिटेड रहेंगे कि लॉन्ग टर्म इन्वेस्टर वैल्यू क्रिएशन के लिए। धन्यवाद।
थैंक यू
सर।
That's the management of Hyundai talking about the outlook for the company. Remember, the stock listed just a few minutes ago. If you can quickly pull it up and see what it's getting up to. It's gotten only worse from the get-go this morning. Listed around 1930, now at 1874. 5% cut on Hyundai is what we have. Remember, the participation of the retail subscription was rather muted, made up by the QIP QIB investors oversubscribed to this by about 9 times, but clearly not too much interest or euphoria on this listing. The markets are having a down day, like we've said. The Nifty 500 again is down another percent. You have a few gainers. City Union on back of earnings is up 13%. Jyoti Labs is looking good. Hindustan Zinc is up 3% despite being in an F&O ban. ICICI Bank is up 2%. CG Power post earnings is up about 1%. Ambuja announced the acquisition of Orient Cement. The stocks both reacted well positively to it at the get-go at 9:15 this morning, but both those counters now deeply in the red. We will understand why that's happening, even though institutions are giving this an acquisition a thumbs up. On the sell side, Amber, about ahead of its numbers, is down 10%. PNC continues to decline after a 20% fall yesterday, down another 8%. EPC companies are lower, defense companies are lower. All in all, it's not a great day. 361 WAM reported strong numbers, but the counter sees a cut of 6%. We have with us Sneha Seth and Kush Bora both joining in with the trading ideas. Sneha, I'll start with you. Last Monday, we were sort of holding on to resisting a fall below 25,250. Within a week, the range has moved 500 points lower, and now even 24,700 looks difficult to hold on to. Sneha, how do you feel about the Nifty?
So, very good morning. If you look at market, yes, we are seeing decent selling pressure despite, like on Friday, if you see, we have seen a strong comeback, but the follow-up action was missing. In fact, yesterday we saw decent writing in call option, 25,000 call option, and we have been continuously seeing this call writers being very active. On the lower side, we also saw put writers exiting their position from 24,700, 24,600, 24,500 strikes even. So that wasn't encouraging. In fact, yesterday's data wasn't encouraging at all. And we were expecting some further selling to come in today. And that's what we are seeing. At this point in time, important level to watch out will be 24,500, 550 zone. Any correction below that would trigger some fresh selling, in index. So which can, at least bring it towards 24,200, 300 zone. In case of banking index as well, if we see the resistance which everyone were talking about, 52,000, 52,200, that has acted as a resistance in yesterday's trade even. We did see some respite, some up move beyond that range, but it wasn't sustainable. Now looking at the overall banking index, even I believe for now 52,000, 52,200 should be acting as a resistance, and we may see some selling coming in banking space as well.
All right, Kush, welcome to the show. How are you reading cues on the benchmark indices now?
Hi, Agam. Very good morning. Very clearly, the bias is negative. While we've had the Nifty sustaining around the 24,700 mark for the most part, for the last couple of sessions, or at least closing above that. I think a dip towards that and a constant retesting of that level is not healthy. The more number of times the index tests those levels, the more likely it is to break down. Right now, we're seeing the index, marginally below that level. I think for me, this downward bias could continue, and the key level to watch for is actually 24,400, where from a medium-term perspective, we've seen some sort of resistance earlier, which should now act as a support. Bias clearly negative. If you're looking at a short trade, then on the downside, you're looking at a 24,550 as the first target and 24,400 as the second target. On the way up, 24,900, 25,000, this zone will now act as your resistance zone or a stop loss in case you're going short. So the bias is clearly negative. While you could see this as a consolidation with a negative bias, the near-term trend is very clearly on the downside.
Sneha, you did indicate that Bank Nifty would see some pressure as well. In that case, would it require enormous amount of bravery to go short on Bank Nifty at these levels?
See, I believe if you want to go short, the ride won't be very smooth in case of banking index, because that was the space which was performing decent. So I would not suggest going ahead and selling banking index at this point in time. In fact, any bounce back in case of Nifty should be used to go ahead and short for a positional trade or for a day trade. That would be a better strategy if we compare Nifty and Bank Nifty.
Kush, your cues on the Bank Nifty, do you think that there could be more concern here as compared to the Nifty 50 at the moment?
No, on the contrary, I'm a little more constructive on the Bank Nifty. While the Nifty is a sell on rise, the Bank Nifty is a buy on dips kind of a setup. And we have seen those kind of, if you see at least on the weekly basis, we've seen a higher low kind of a formation, a higher low, higher high kind of a formation. So the trend, from a medium term perspective, from a near term perspective, isn't really as bad as the Nifty here. So any kind of dip towards 51,500 should actually be taken as a buying opportunity, on the bank Nifty. Yes, there is pressure, seeing how the overall market is, perhaps, seeing some sort of profit booking, consolidation, negative bias. The bank Nifty actually stands out. So any kind of dip towards 51,500, will be taken as a buying opportunity. The moves in this one have always been sharp, so that will continue. But for me, Bank Nifty is one index that could perhaps be considered for a long trade even in the market like this. Also, the fact that HDFC Bank is sort of starting to turn a corner around, has had a good run, might continue to do so. From a near-term perspective, will hold Bank Nifty in good stead. So Bank Nifty is a buy on dips kind of a setup for me at the moment.
But buy on dips at 51,500 is what you're saying, right? Because that's still quite a bit out, I would imagine. It's not like it's an immediate trading call. Hopefully, we don't go down to 51,400 anytime soon.
So, that's from the perspective that there is volatility, and from a near-term perspective, you're looking at a resistance at 1,200 mark. So the risk-reward ratio from here will not be favorable. Because the index has turned around a couple of times from those levels. If the Bank Nifty does slip indeed to 51,500, even 51,600 levels, for that matter, the risk reward ratio will become very attractive, where the 51,000 support zone will start acting in, and on the upside you've got 52,200, and once that is taken out, 52,800 as well on the upside. So it's mainly from the risk reward standpoint that I feel that any kind of dip should be taken as a buying opportunity on Bank Nifty.
Okay. Sneha, you want to go into your trading calls? I believe you've got 2 sell calls this morning.
Yes. So I have a sell call on IOC. This counter, if you see, it has been trading in a range from quite some time, wherein around 164, 165, there was a support zone, which it has breached. Today, we are seeing some fresh coming in below those levels even. So I believe we may see further selling pressure in this counter. One can expect a target of around 149, and the stop loss can be maintained around 162. Apart from this, from banking space, I have a sell on IndusInd Bank. Now this counter again, if you see, it was consolidating in a range wherein 1330, 1340 zone was acting as a support, and which has been reached yesterday. We have seen recent writing in call options as well. So I believe we may see further selling over here, which can bring it towards 1250 also. And on the higher side, I believe 1327 should be strict stop loss in that.
What about you? Stocks on your radar this morning?
So a mix of a long and a short. Torrent Power. This was one stock that we discussed yesterday. Has done well today as well. In a volatile market like this, the clear trend on this one is on the upside. It's from the cash segment though. So if anyone does want to consider this, in the cash segment, Torrent Power is your stock to look at. Your targets at 2020 and 2070, 1950 is where you place your stop loss. On the short side, we've got Biocon. Again, very clear medium term, downturn on this one. Had a good support zone around the 335, 340 mark. That's been broken, and the stock is heading lower. The targets on this one are 330 and 325. Since the start of the show, the stock already slipped and closer to the target one. But if someone does want to consider, then you can take it for target 2 as well, which is 325 now, and you can move your stop loss to 335. So Biocon is a sell.
Sneha, what are you doing with cement stocks? The moves that are a little difficult to understand. Ultratech reported numbers, the stock is higher. Ambuja reported an acquisition. Stock reacted positively, but now is trading negative as we see it on Orient as well. Anything in the cement pack that looks like a good trading strategy at this stage? I mean, Ambuja and Orient, would you bet on a recovery today itself?
The Ambuja, I believe, yes, the counter has corrected from the higher levels, but I think around 540, 545 zone, that is the zone wherein one should, think of, accumulating this counter if they want to, because that is the support zone. On the weekly chart, there is an 89 MA support over there. So I think further selling can be there, but around 540, 545 zone, one should review this counter, and there one can, think about taking a fresh long in this counter. At this level, I would say avoid. But yes, in the dips around 540, 550 zone, one should be looking at.
All right. Maybe if we can actually take stock of all the companies and all those counters which are moving in the futures and options space, and looking at perhaps an increase and decrease in open interest. If can we pull that list up and see where? Well, I'm sure there will be plenty more shorts at this moment. So there's a little reversal of the sorts. So Tata Chemicals, which was up as much as 9-10% yesterday, is actually looking at profit taking, is down 5% now. And again, we're seeing an increase in open interest there. Then we have Dr. Lal Path Labs. The spot is not looking at significant cut, and neither is Kotak Mahindra Bank for that matter. But we are looking at positions being built, considering we've seen an increase in open interest there. ICICI Bank and ICICI Prudential, on the other hand, looking at some longs coming through. What about stocks which are seeing unwinding? We have long unwinding for names like Balrampur Chini, Ultratech Cement, as well as RBL Bank and Atul Limited. So some very interesting names coming in there. Perhaps we could take stock of something like Tata Chemicals as well, because this certainly will be something which is very, very, I would say strange. Kush, come in on Tata Chemicals. And yesterday it did seem like it was nearing a new high, and now once again we're looking at selling. How would you approach Tata Chemicals?
I wouldn't really, and the reason being that this stock hasn't really seen any kind of a big move or any kind of a positive return in the last year and a half as well. If you see somewhere around the mid or the late of 2022, the stock was around this 1200 mark. It's still trading below that. There was a spike, but that's given way. So even in the chemical space, where a lot of other names are seeing some traction, this one hasn't really been able to break out of a range and hasn't really sustained on the upside. So if someone does have a position from lower levels where it was consolidating around the 1050, 1075 mark, not a bad idea to perhaps exit, because 1200 seems to be a strong resistance zone, a strong supply zone. So if you do hold this position, not a bad idea to book some book profits, take the money off the table from Tata Chemicals.
Take some profits off the table. If you hold the counter, the stock was up 10% yesterday, now down 4.5%. It's time to move on to queries, and this one's a tough one. Kumar writes in from Delhi, and he's holding Vodafone calls at 10 calls at 5, at a premium of 5. If you can just pull up where Vodafone calls are currently trading at and get a sense of what, oh my God. Sneha, that looks extremely painful. I don't know what is left to hold on for, but anyways, have a go at this one. What does he do? It's his buy price is 5. His buy levels are 5.
Yeah, I think the overall chart structure is quite bad. I don't think one should, trading with a call option in this counter. In fact, the put option would be a better idea, I would say. But yes, if someone is holding a call option here, I would say that please exit it. I don't think there is any chart structure wherein it shows that it will rebound from here anytime soon. Maybe it can at least correct towards 7.5 even going ahead. So strictly it is that exit at this point.
Okay, another very interesting query coming in Tata Consumer Products, which did see a little bit of a correction when its earnings came out. We have Asia from Siliguri holding Tata Consumer Products 1020 call, paid a premium of 20. The question is, should I hold? So let's take a look at where this one is currently trading at. The 1020 call, firstly, let's see where the spot price is. And with respect to the spot price, let's see where. So it's not too far away. Considering it's in fact just about 5 points away, it's about 0.5% away from it going at the money. It just seems like the call must have potentially been held for a bit, which is why we're seeing that deterioration in the premium. It's currently at 12. This call was bought at 20. Kush, do you think it's a good idea to hold on to this still?
So, Agam, she can continue to hold on to this one. The only reason, I suggest that, with a stop loss of 5 rupees, let me add that, with a stop loss of 5 rupees, continue to hold this one. The reason is, while the near-term structure, is extremely, bearish on this one, the stock's now gone into oversold territories with the kind of fall we saw yesterday and the crack that we're seeing today as well. Now, given that, you typically have some base around the these round figure, 1,000 kind of marks, plus the stock's gone into an oversold territory, there's a possibility that, you could see, a swift, sharp rebound on this one. I'm not saying that, that will turn the fortunes for the stock, but as you rightly pointed out, the stock is not too far away, or rather the option is not too far away from her buying price. There's a possibility that, she could exit at a much lesser loss, perhaps even at cost. So with a stop loss of 5 rupees, continue to hold on to this one for some time. You might get a rebound, and as I said, you might get an opportunity to exit at a much lesser loss than you're looking at currently.
Hold on, you might get a better exit on the counter. Well, a quick mention, Paytm numbers have come through. Revenues are up 10.5%. Net profit is of 930 crores versus a net loss of 840. But remember, this is not comparable because there is an exceptional item of 2,048 crores for sale of its events business. So operationally, we don't know whether there is an improvement. The profit number that you're seeing versus a loss is largely on back of the fact that they sold their events business for over 2,000 odd crores. That's what you have on Paytm. The stock, of course, trying to react positively to that, but not doing so just yet. Next up, we have another query coming in from Rahul, who writes in from Bihar. He's holding Hero MotoCorp calls of 5,300 and he's paid a premium of 54. Let's take a look at what the 5,300 calls are currently trading at. 57.75. So he's actually in the money, fortunately. Sneha, what's the advice with everything that's happening in the markets and auto having good days or good weeks and followed by very, very long periods of selling? Do you advise Rahul to take the little bit of profit that he's made on these calls?
I think one should, I guess he should be holding it, because if you look at the chart structure, this counter has, has been consolidating around the 200-day simple moving average on the daily chart. And there are possibility that once it surpasses 5,000 to 80, 90, this levels, then we may see follow-up buying coming in. So I think one can keep a strict stop loss. Like if we have, one should keep a strict stop loss of around, say, 5,000. 60, 70 odd zone, that should be acting as a support for now. So whether that stop loss on the cash level, one should, can hold this counter. If any correction below the support zone, which I mentioned, that is 50,000, 5,050 levels. So in that case, one can, exit their longs, but I think there should not be any issue in holding this counter. It has been consolidating after a fall, which is a positive thing.
Okay, well, on that note, thanking both Sneha and Kush for joining us and taking us through their views on the markets, solving our viewer queries, and of course, giving us a couple of trading ideas to work with. With that, we shift focus to the commodity space, and we have Dinesh Somani. He's the co-founder of Pro IntelliTrade Services, who joins us right now. Dinesh, good morning. Thank you so much for joining in. Dinesh, the first question will be with respect to gold. What's the outlook here?
Yeah, good morning. As we saw, the prices rallied, and they rallied exponentially right from the low of recent low of 66,000 to 78,300, 400 levels. Prices are moving up. The basic reason is we expect a 25 basis point cut in the next meet of the Fed. ECB already cut the Fed rate by 25 basis points, and that is boosting the prices. Secondly, the Middle East tension that is bringing up, that is also adding premium to the prices. At present, I expect around 78,150 should be a good buying level in gold MC December contract. Upside potential in a day or two should be 78,600, 77,800 should be the stop loss maintained. I think the bullish momentum is likely to continue in this week as well.
It's fantastic of what silver is getting up to. It made record highs back to levels of 2012. How do you play silver right now? Do you feel the momentum in silver is here to stay?
The momentum in silver is even stronger compared to gold. I mean, the prices rallied almost 8,000 to 9,000 rupees in the last week. Prices are trading around 98,300 levels. Any fall of 200 rupees near about 98,100 should be a good buying opportunity for intraday cases. Upside potential could be 99,500. Stop loss to be maintained below 97,300 levels. We expect prices to rally to 1,01,000 almost in the weekend.
All right. And Dinesh, what about crude at the moment?
Fundamentals does not support any upside potential in crude as of now, though the Middle East tension is driving up, but is not adding premium to the prices. We expect around 5,905 should be a good selling level. 5,815 should be the target on downside. 5,965 is a major resistance zone, should be the stop loss as of now.
Right. What about aluminium? Base metals as well, a buy call here?
Right, right. Aluminium is at a support level around 238 should be a good buying level. 240, 250 should be the upside potential. Stop loss to be maintained below 235 levels. A good buy opportunity on the downside. Prices already corrected yesterday from 243, 240 to 50 levels to 237.50 right now.
All right. Dinesh, we leave it at that. Thank you so much for joining us and giving us your view on those key commodities. With that, it's also a wrap on this edition of the F&O Show. Lots more lined up on the other side. Stay tuned to NDTV Profit.
I think it's a brilliant session because if India doesn't start disrupting the rest of the world and showing the Indian way to innovate, I think we've lost an opportunity. And with the world in a crisis in terms of what's happening with geopolitics, with what's happening with health, I think this is the right time for us to come together with disruptive innovation. And I think that healthcare has a major role to play there.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
Welcome, you're watching the Small and Mid-Cap Show. I am Mahima Vachrajani and with me is Varsha. Well, before we move on to the interesting managements that we have lined up for you in today's Mid Show, let's take a quick check at how the markets are panning out to be. Well, both the benchmarks and the broader markets are under pressure. The Nifty is down around 250 odd points, within a range of 250 odd points. But before we look at the markets, let's take a quick look at how the Sensex is also doing. The Sensex is also down around 0.23%, in the similar range with Nifty. The broader markets are also under pressure, but they're seeing more pressure and more selling as compared to the benchmark indices. The Midcap 150 is down around 1%. The small cap 250 is down around 1.8%. Let's also pull up the Bank Nifty and see what are the levels the Bank Nifty is trading at and see how it's performing in trade today. Well, it's trading flat and it's off from its day's highs and trading around the 51,900 levels. So there you go, that's Bank Nifty for you. Let's also pull up the contributors on the Nifty and see what are the top gainers and top losers on the Nifty. There you go, there are counters like ICICI Bank, Infosys, Bharti Airtel, Shriram Finance, some counters that are in green and trying to keep the Nifty in check, but some counters like L&T, M&M, Reliance, Tata Motors in red, which are pulling down the Nifty by roughly 110 odd points. Let's also pull up the advanced decline ratio and see what's the breadth of the market like. Of course, it's a seller's day, so the declines are 1800 odd declines versus 300 odd advances. So the ratio is quite high. It's almost 6:1 when it comes to the ratio. Let's also pull up the top gainers and top losers in terms of sectors and see how are the sectors performing in trade today, where there are hardly some sectors in green. Something like Nifty IT is up around 0.16%, but Nifty Realty seeing quite a significant pressure, down around 2.6%. PSU banks down around 1.75%. Metals also down by 1.3%. In fact, Nifty Realty has been the top gainer for the entire Samvat 2080. Now that we will be entering a new Samvat 2081 on the day of Diwali, that is 1st of November, it has been the top gainer, but it's seeing a significant pressure since the past few days. Similarly, Nifty Media is down also around 1% and Nifty Auto is down around 1% as well. But moving on, our first guest on this mid show is Mr. Ketan Sablok, who is the Group CFO of Rosari Biotech, who joins us now. Welcome to the show, Mr. Ketan. My first question to you is that, your sense of how the quarter has gone by. It's seen a pocket of both growth as well as some weakness in some counters. So I want to understand as to how was the quarter as per your sense, what were the volume growth at overall, and what's the way forward?
Hi, good morning. I think we've had a pretty much a quarter with which we are quite satisfied. We've had a good volume growth, especially in the HPPC division of ours and also in the domestic textiles. So that's a little heartening for us. Pricing was a little bit of a challenge. We had to soften prices just to ensure the volumes are met. And that's why we saw pretty much a slow kind of a growth in this quarter. But I think going forward, we are very, very hopeful that the pricing will come back, volumes will pick up further. And to be specific on the divisions, I think the HPPC volume uptake was around 10 to 12% growth over last year. The pricing was slightly lower on the lower side, and that's why we saw a little bit of a smaller growth in the HPPC. Textile domestic saw again some volume growth, but again we had pricing pressures. On the export front, I think that's what has led a good run during this quarter, and I would say probably even the first half. And textile in the export side, we had a little bit of headwinds from our Bangladesh market, some of which did not pan out the way we had expected. But we are seeing now good order flows coming back from Bangladesh, and we hope that December onwards we should see the Bangladesh exports picking back again. So I think we are in for good times, especially from December onwards, November, December, and then getting into the fourth quarter.
Well, Mr. Ketan, Varsha here. Regarding our domestic business, which seems to have declined, now going to exports or increasing exports was our conscious choice, number one. And number two, so the new product launches, didn't they help to offset the degrowth that we have seen?
Yeah, Varsha. So I think you're right. The export push, I think that's something we've been talking about through Q1 and Q2 is a conscious call that we've taken because we've seen that the domestic market volumes are really not picking up the way we would have wanted it to. And then given that, our key raw material, ethylene oxide, we have limitations on the availability, plus the capacity utilizations for our ethoxylations are almost now peaking. They are at about 85-90% kind of utilization. So it was a conscious call for us to look at the export markets, build up volumes on the export side, because that's something is a large untapped market for us. And we hope that going forward, exports is going to be, and we've seen in the first half, the export has been the real growth driver for us. The exports have grown almost in H1 by 30% onwards, and the domestic growth rate has been about 5%. So we've really not degrown in the domestic market, but probably we've not grown the way we would have wanted it to grow.
Right. So, Ketan, I believe then you expect exports to grow further in the coming quarters as well. And if that is the case, I also want to understand that, right now maybe the new customer acquisition that you're making, the freight cost you're bearing, on your own for that matter. And that is kind of impacting your margins. So, if exports increase, how will the margins be impacted overall?
Yeah, so see, some of the markets and some of the customers, as you rightly said, we just entered into, and freight is really playing a hardball for us, especially now, given the situation globally, availability of containers, the freight routes have gone a little longer. So this is something we'll have to deal with. But having said that, I think that will not stop us from growing our export basket, because that's where we see the revenue streams, especially with some of the capexes that we've lined up and which will come up over Q4 and Q1 of next year. I think it's time for us to start seeding these customers so that next year we are ready full flow once the capex come online. So this is something we'll deal with over this year, getting new customers, new geographies, even if it's going to cost us a little bit on the freight, because that's where we see the growth coming going forward.
Also, there was this pricing pressure driven by raw material, which has been, intensified. Now, should we expect this to continue for the next few quarters until the raw material prices probably increased? Whether pricing or price will offset the growth that you're expecting?
Yeah, so raw material prices have stabilized now. So our outlook now is that further price coming down doesn't look like it's going to happen, but it again depends, because we have a wide variety of products, different divisions, so each one could play on its own. But our key, as I said, would be to keep driving the volumes and keep utilizing and ensuring that capacities are fully utilized. Now with the agro season waning out, we'll have a lot of capacities available for some of our non-agro products. And our key will be to keep utilizing our capacities to the levels we've utilized in H1. So that's how it's going to play out till the new capacities come into play.
Got it. Ketan, I also want to understand that you pointed out that there was some impact because of the Bangladesh situation as well, which is now easing. You're getting more order flows. But, it's a two-part question. First of all, what was the impact in terms of quantification, if you can quantify that for us? And secondly, because of the Bangladesh impact, we spoke to a couple of textile companies which said that they might, the orders might get diverted towards the Indian exporters. So are you seeing that there is a change in terms of shift, in terms of orders which were coming from Bangladesh are now coming from Indian textile companies?
So on your first part, yeah, we saw a significant decline in the Bangladesh export business. I would really not say that we didn't have orders, but we took a conscious call not to fulfill many of these orders given the, situation in terms of banking, forex, LC is not coming on time. So we had a little bit of a, thought that it's better not to export rather than expose ourselves to any of the vagaries of the financial situation in Bangladesh. But now I think a lot of these issues are slowly getting resolved. We are getting a lot of positive signals from the Bangladesh market. And we hope that, and we expect that, November, December onwards, we should start seeing a good traction in the Bangladesh. Because Bangladesh is something we, seriously went into this year, setting up the office, the division, the people over there. So we have a lot of hopes of this market bouncing back for us for the textile chemicals. And on your second part, I really don't think we've seen that at least immediately in the last quarter. We'll have to just wait and watch, how the domestic situation plays out. While a lot of the domestic players are talking about it, but if you frankly ask me whether it's, coming out in terms of orders and numbers, we've not seen that yet.
So continuing on the textile segment, things were recovering in textile segments. I remember one or two companies posting good results in last quarter. So what are the challenges that you as a company is facing when it comes to, textile segments?
So domestically, I think if you see, the pricing is the only issue. Otherwise, as I said, we've grown in terms of volumes. On the export side, in textiles, I think once this Bangladesh thing opens up, there are a lot of other geographies we are looking at, including countries like Vietnam, Egypt. We've also ventured now and send products into North Africa and Turkey. So I think overall, over the next few months, we'll see the textile business, which has been a little bit of a stagnant growth for us in the last few quarters. And we expect Q4 onwards, it will bounce back. That's how we plan.
And even in terms of home and personal care, there has been an impact there as well. So for that particular segment, when do you expect recovery in terms of timeline?
No, so in home and personal care, again, we saw good volume growth in this quarter. I think we would have grown about 11-12%. Pricing, was the issue. But we expect this to be the main driver for us going forward. HPPC is the segment that's really driving our growth. We had a little bit of a muted demand from FMCG home care, which we hope at least in the second half the demand should pick up. And then I think we'll have good numbers to show, better growth number to show in HPPC also.
When it comes to capex for the entire organization as a whole, and what is the peak revenue that you are expecting from this capex?
So this capex, the capex at our Dahej facility, we spent about 128, and we've had a little bit of a modification now in the capex. So we are spending an additional about 80 odd crores in that. At a peak utilization, we expect the revenues to be between 3 to 4 times the asset turns. That's generally what our assets give us in terms of revenue.
And this additional 18 crore that you've done, will it be via internal accruals or you'll be funding it from somewhere?
No, so it's a smaller number. We'll be doing it internally.
All right. And in terms of capacity utilizations, Mr. Ketan, where does your capacity utilization stand at right now? And considering the kind of capex that you're doing, how will the capacity increase? And similarly on that lines, how will the utilization increase?
So currently, if you see, I think in the Thock solution space, our capacities have been completely utilized. As I said, last quarter, we were at close to 90. This quarter, we were around 80, 85. So in the first half, I think we have peaked on the capacity utilization for the entire Thock solution piece. And that's where we are adding capacities, additional about 30,000 tons. I think some of the initiatives, as I said, we are taking on growing the export market is actually playing into the fact that these capacities will now come on stream by Q4 onwards. And that's something we have in our mind. And I think some of the initiatives that we are taking is towards ensuring that the new capacities over a period of 2 to 3 years get fully utilized.
Also, for FY25, what kind of growth are you expecting when it comes to top line, and will you be able to sustain the margins, or we can see a dip in margin because of the operating cost that you are facing?
No, so for FY25, we had earlier indicated that we'll grow at close to between 12 to 15% kind of levels. I think H1 we have closed to growing at around 11%. I still think that we'll be able to end the year at the levels we've talked about, between 12, 14, 15%. That's it's very, actually, given the situation globally, it's become a little difficult for us to now really talk about the numbers, but having the half year already gone by, I think we should be around that 12 to 14% kind of top line growth. Margin should be at similar levels.
Right. Well, Mr. Ketan, thank you so much for giving those answers so candidly, and thank you so much for taking our time and speaking with us at NDTV Profit.
Thank you, Varsha. Thank you.
Yeah. The next company that is in focus is CG Power. It came out with its Q2 earnings, and we're joined by Mr. Amar Kaul, the MD and CEO at CG Power and Industrial Solutions, who joins us now. Welcome to the show, Mr. Amar. First off, your sense as to how the quarter has gone by for you. There are some pockets that have done very well, some pockets which have, not done very well. So your sense of the entire quarter gone by, and second half, how is it shaping up?
So thank you very much for having me here. So from the quarter results that we have, I think it's a fairly strong growth that you would have seen, about 19% growth. And profits, of course, the result that you see, it is showing downward trend, but I'm honestly not worried about it, because there's almost 36 crores that we invested into strategic initiatives, right from the acquisition expenses or the strategic initiatives for our go-to-market strategy. So to me, I call it investment to take the short-term hit, but for the gain in future. So honestly, I'm not really worried about it. We continue to gain the momentum.
Got it. Your margins were down by around 320 basis points, and this is on addition of a one-off cost, which was around 36 crores. But even if we consider that one-off, the margins have kind of shrunk as compared to the YOY situation. So first of all, what has happened there? And going forward, do you expect margins to be in the same range, or do you expect a recovery?
Absolutely. So very good question. So we had, if you see power sector, the segment that we have, it has been doing fairly well. On industrial side, we had a bit of stress on the motors piece in last 2-3 quarters, but I think it's already hit the bottom and it's already started sliding up. So with the operational excellence action that we have initiated on the lean thinking in the manufacturing plant as well, that started showing results. So for the quarter, it did not show much, but if you look at individually for September performance, we gained almost 200 basis points on that, which will hopefully get reflected in Q3 as well. So good days ahead.
All right. So then where do you expect margins to be at by the end of FY25?
I think we should get close to where we were at, between, say, 14 to 15%. That's where we would expect it to be at.
All right. In terms of your order book also, your order book is up 50% YOY, which is significant growth. So I want to understand, first of all, the kind of breakup of this particular order book. And secondly, what will be the execution timelines like in terms of revenue?
So these order books is majorly in the power sector. As you know, the sector is booming, and whatever we add to the capacity, you always fall short of that. And that's where we need to keep investing more and more to expand our capacity. So in power, typically we have switchgear and transformers. So both have scaled up, between 44 to 50% increase in the backlog that we have. So and the momentum continues.
Okay. And in terms of, QIP, you've recently approved a QIP of roughly 3,500 crores. Now, I understand that this fundraise is for expansion plans as well as for innovation, but give us some more color as to how exactly this big amount will be utilized.
So there are three different areas. One, if you look at the kind of backlog we are building and the growth we see in the sector, so we need more money for the expansion. So I would say approximately 1,200 to 1,500 crores is I have very clear visibility. After board approval, we'll of course initiate that discussion for the expansion on the power sector area. And then we have, commitments to the semiconductor industry that we have already bought and the process of buying from Renesas, the radio frequency components business. And third, I would say in terms of innovation. So we're investing a lot in terms of innovation to make sure we have the best-in-class products, which is made in India, for India and the globe.
Got it. Mr. Kaul, two things here. You're expanding your capacity overall in terms of power as well. So give us some color as to where will the capacities be at from a long-term perspective, let's say by the end of FY28.
Oh, so FY28, obviously. So today, if you see the board approval that we have, we should be getting from, if I take transformers, so we'll go up to 40,000 MVA. So I would expect it to go up to 80 to 90,000 MVA by 27-28 time frame, at least. So and we have more appetite to go in that area.
In terms of semiconductors, you said you will be putting a lot of those money raised in terms of the OSAT plans as well. So what is the kind of strategy you're adopting there? How will the money be utilized? And from when do you expect the kind of revenue inflows from this particular semiconductor facility that you'll be coming with?
So there are two segments. So OSAT, if you know, is into assembly and testing. So that project is as per the plan. The plant construction is going on full swing. The leadership management team is in place. So as per the timeline, 26, we should be able to see revenues coming out from there. And if you look at the other side of semiconductor business is the design piece of it. That's where we are pouring into buying the company from Renesas, which of course with the regulatory approvals will take at least 4 to 6 months more. And then we build the capability both for designing as well as assembly and testing to close the loop.
Got it. Mr. Kaul, you're also foraying into the covered space. So give us some sense as to, what exactly are you exploring there? Do you already have customers? What's the kind of strategy you're adopting there as well?
So Kavach, as you know, is TCAS, Train Collision Avoidance System. So good news is that we already got a development order from Indian Railways, which should get executed in next 8 to 10 months. Plus, there's also a big tender, 7,500 crores, which has been floated. So hopefully, even if we get 10% of that, that needs to be executed in less than 12 months. And Railway Ministry has been pretty bullish on that, and they want us to go fast on that direction as well. So pretty strong on not only for the Indian Railways to improve on the safety piece of it, but also making sure that there's a good synergy with CG Power business, where we import a lot of electronic components which can be actually fed from GG Tronics itself.
Right. You rightly mentioned that you've also acquired 55% in GG Tronics. Just to understand, because this is Kavach anti-collision system. So just to understand that this you've acquired for roughly 3.2 billion rupees, what kind of a top line addition will this make to the overall top line of CG Power?
So yeah, it will go step by step. But I think what we are looking at, for example, even if we get this tender of so I think that itself will be about 700 crores, which should get accomplished in next 12 to 18 months. So that's only one piece of it. Plus incremental things will keep happening. So pretty strong synergy between the two companies.
And what are the kind of margins when it comes to the covered system for you? Where will the blended margins be at? So
we don't declare individually for each of the businesses separately, but yes, if I say overall PBT margin that you look at 14 to 15% that I said in the beginning, it'll be incremental to that.
All right, and the Renesas acquisition that you've made for semiconductor design, give us some more color with respect to that. How will that play out for CG Power?
So that, if you see, we are trying to build more capability into the country, not only for the organization CG Power. So this will be primarily into two segments for the radio frequency components business, which is wireless infrastructure, and SATCOM, which is satellite communication. And there are different products along with that which you have. But if you look at the main applications, for wireless communication, it's the 5G network, the way we are expanding into India. So we'll be introducing power amplifiers, PA bias controllers through this acquisition. And for SATCOM, if you see the entertainment system in the aircrafts that we have, So that's where we will be focusing on, and it's generally called LEO, which is low Earth orbit broadband constellation. So these are the two focus areas that we have in this acquisition.
Right, and you're also foraying into newer end segments like ESL orders, biogas, ethanol progress. So I want to understand as to what's the progress with respect to this, as well as what are your plans with respect to this?
Oh, I think that's interesting, and that's why I said, we are not looking at the market, how it's going up and down. The thought process for the group has been control what you can control. So we can look at the markets where we can foray, and we have not been there. So for example, you talked about EESL, we had already received for our consumer products division huge orders, which is getting executed right now. But then we looked at other businesses, for example, drives and automation. The drives, we got another 10 crores order along with the same ESL. And then we linked it back to the motors also. So recently we got about 8 crores for that order. So, and there are more in the pipeline. So we're exploring each of these new areas, biogas, nuclear power corporation. So each of these where we are not present, so pouring into those verticals as well.
Got it. Well, Mr. Kaul, thank you so much for taking our time and speaking with us at NDTV Profit, and all the best for the second half of the year.
Thank you so much. Pleasure talking to you.
Yeah. Well, with that, we're completely out of time on this edition of Small and Mid Cap Show, but there's more lined up on the other side. Stay tuned.
It's been more than a decade since I was on the ground here in India. I follow from a distance, but on the ground, what I see is the remarkable progress that India has made, and in particular, the success of the government in leading the nation into a better future. So it's very encouraging at a time when you see many other governments that are struggling to do anything right, to see a government that's really succeeding.
We're going to look forward to hearing this and a lot more from you. I'm not going to give most of it away, so stay tuned for that conversation with Paul Romer. Thank you so much.
Thank you.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
Hi, good morning. It is morning. Good morning. Thanks so much for tuning in. You're watching Ask Profit on NDTV Profit. And my name is Alex Matthew. With me is Mahima Vachrajani. And we will take you through the next half an hour to 1 hour, I want to say, of trade, depending on what is happening at the NDTV World Summit. There are some interesting conversations which we will cut into. But for now, let's take a look at where the markets are right now. And it's not a pretty picture, unfortunately. It is weakness in the broader end of the spectrum, which continues from trade yesterday. In fact, we've seen this over the past few sessions. The benchmark, of course, only losing about 0.4% or thereabouts. But even there, you're seeing a little bit of pain in a few quarters. But the real pain is visible at the broader end of the spectrum. The mid-cap index losing over 1%, in fact 1.4% at the low point of the day. The small-cap index down 2.2%, and that adds on to the pain that you've seen in trade yesterday as well. The market breadth, as a result of which, is very heavily tilted in favor of the declines, and it is quite a wide margin. This is almost as wide as you saw towards the end of the session yesterday, and quite a lot of that pain visible in the broader end, as I pointed out. Now, take a look at some of the sectoral indices. Initially, you saw the Nifty Bank hold out as a gainer, but at this juncture, there's only IT that's treading water. Everything else is losing ground. In fact, the worst performers are the Realty Index, and that's really a picture of the day. Most indices trading in the red right now. But there are a few names that we're focusing on at the start, and one of them, of course, the pair, Ambuja Cements and Orient Cement. There are a few others that you would like to highlight as well, though, Mahima.
Absolutely, Alex. So, something which is really doing well, which is working against the market today is City Union. Came out with its numbers, and good set of numbers, positive, because growth is back to 5% QOQ, both on advances as well as deposits. Margins have improved, and H1 FY25 provisions have significantly gone up.
Oh, and it's at the high point of the day.
Exactly. It's at a high point of the day and currently trading 14% higher. The next stock in focus would be, of course, Hyundai India. It got listed at a discount. Let's see what it's trading at right now and see how much of a pressure it's still going through. Well, it's down at 4% as we speak. But, interesting, Alex, because brokerages have come out with positive view on Hyundai. For example, Nomura has initiated buy with a target price of 2472, which is an upside of almost 20% from its listing price. Macquarie has initiated a coverage with a target price of 2235. That's roughly a 14% upside from its issue price.
I saw Enam's initiation with a reduced rating on the first day of listing.
But that is another counter in focus, of course. And one more counter, which is defying the market trends today is EPACK Durables. It's signed an agreement with Hisense India, which is for manufacturing of air conditions and home appliances. And the stock is locked in upper circuit, up around 5%. But of course, Alex, the focus, as you rightly mentioned, is Ambuja acquiring Orient Cement. The acquisition is at around 8,100 crore. And we have Mika joining in with more details on that. Mika, what are you picking up?
Yeah, so the update came in this morning, and Ambuja Cement will acquire 46.8% in Orient Cement, and the acquisition value is at 8,100 crores. Now, the transaction will be funded entirely via internal accruals of the company, and they'll be making an open offer at 295 rupees per share, which is at a premium of Orient's yesterday's close, and this will trigger 26% acquisition of public shareholding, and it will this acquisition will add 16.6 MTPA of capacity for Ambuja, and acquisition will help Adani Cement as a whole to take its operational capacity to 97.4 MTPA. A little bit about the deal valuations. Well, if you take it at operational cement, just the 8.5 million tons which is currently on stream, the valuations come around $114 per ton. But when you talk about even the planned capacity, that's at $58 per ton, and both these values are lower than the greenfield setup cost of $110 to $120 per ton. A little bit about Orient Cement. Well, current cement capacity is at 8.5 MTPA. They have also ready to implement capacity at 8.1 MTPA, which was taken in the deal valuation calculations. Clinker capacity is at 5.6 MTPA, and the potential cement and clinker new capacity stands at 6 and 4 respectively, and they have presence across Telangana, Karnataka and Maharashtra. Now, when you talk about the benefits for Ambuja Cement, Well, the acquisition will help Ambuja Cement increase its presence in South and West India. It will increase its pan-India market share by 2% additionally. And Orient also has large-size, high-quality limestone deposits at Chittorgarh to support capacity in northern India, which is around 6 MTPA. And the acquisition will improve the overall return on capital employed for Ambuja. When you look at it from Orient Cement's perspective, well, the opportunity will improve operational efficiency via a higher green power mix and domestic coal linkages. It will also help in clinker cost reduction potential of around 150 rupees per ton, which is positive for the company's margins, and it also helps them achieve their target EBITDA per ton of 1,500 rupees by FY28.
All right, comprehensive. Thank you so much for getting us those details, Mika. And it's a great opportunity for me to get on board our experts. We've got Sameer Dalal of Natvarlal and Sons Stockbrokers, as well as Swati Hodkar, AVP Technical Research at Nirmal Bang. Thank you so much to the both of you for taking the time, and good morning to you. Sameer, I'll come to you first on Ambuja Cements. What do you make of the deal? What do you make of the pricing of the deal and also the consolidation that's underway?
Consolidation, I'll answer first. It's great for the cement industry, right? Okay. When you have players controlling almost 85% of the overall market, I think it gives some amount of pricing power to the larger players. Plus, you get the operational benefits of having a larger capacity, you get operational efficiency. So, in every way, it's a good thing for the industry. For Ambuja Cement, I think they've not paid too high. The valuation seems all right, given the fact that this is an ongoing plant. You know, if you set up a new plant, it takes 3 years gestation. There's an interest cost added for the money that you put in upfront, and taking all that into consideration, I don't think the valuation is that expensive. So it's a positive for Ambuja Cement. Of course, for Orient Cement shareholders, it kind of creates a base of the price. But one thing I will say that we've seen in the past that whenever these acquisitions are made, it's not necessary that Orient Cement shareholders stand to benefit significantly. You can take Sanghi Industries, a similar acquisition done by the group of yours, Adani, where they've signed an agreement on certain buying conditions, which allows only certain amount of profit to go to Sanghi. So if I were the investor, I think I'd much rather be at this point in an Ambuja than an Orient Cement. So if you are holding the Orient Cement shares, I would tender them, and then whenever I get a chance, I'd buy the ACC Ambuja stocks. I mean, more Ambuja than ACC, but yeah.
Okay, that's a fair and good advice to give on a day like today. Thanks, Sameer, for that view. And the standard disclaimer, of course, that we have to provide you with. This is NDTV Profit, part of the NDTV Group, and it is owned by Adani Group, which owns, of course, Ambuja. Let's talk about the first queries that have come through, and that number that you see on your screen, that's where you send your questions to us. If you're tuning in for the first time, make sure you tell us what your name is and where you're tuning in from. The first question is from Gujarat, from Porbandar. Kamlesh Majithia. I got your name wrong. I'm so sorry about that. Kamlesh is asking a question about Saregama, which he's bought at a price of 570. He's got 250 shares. Swati, what's the advice that you would give for somebody who's holding at a loss?
Good morning, Alex, and all the panelists. Overall, the view is a little bit cautious. Why I'm saying that? Because on the weekly chart, the stock has given the formation of a negative divergence, which shows that we might witness some sort of a more correction towards to 470 to 480 levels. So up to that level, we might witness a correction, and from there onwards, we might see some sort of a reversal, which might take a counter towards to 540 to 600 levels. But at the current levels, view is a little bit cautious. If your plans to hold for a short-term duration, definitely you can hold on and you can average it out at every dips towards to 480 levels. So it's a hold from my end at the current levels and wait for the average it around at the low levels.
All right. Now, as you know, NDTV Network has taken a giant leap with the formal launch of its new channel, NDTV World. Let's cut across to Erik Solheim, who is a former Minister of Climate and the Environment of Norway, as well as Lindy Cameron, UK High Commissioner, and Harjeet Singh, Director of Fossil Treaty, as well as Shishir Priyadarshini, who is the President, Chintan Research Foundation.
Together And I'm hopeful that we'll find some of those today in this August panel. A quick introduction is in order. We'll get Erik Solheim as well. He's the former Minister of Climate and Environment of Norway. He's joining us from Oslo. Excellency Lindy Cameron is here. She's British High Commissioner to India. Harjeet Singh, Global Engagement Director, Fossil Fuel Non-Proliferation Treaty Initiative. And we have Mr. Shishir Priyadarshi, who's the President of the Chintan Research Foundation. Thank you so much, all of you, for taking out the time. And Erik is also with us here. Let me start by asking one thing, which I think would also set the context of why this conversation is so important, which is the fact that the speed with which we are seeing climate catastrophes happening around the world, their recurrence is now happening at an alarming pace. Developed countries are facing extreme challenges, but that also gives an idea about the fact that if the largest countries are struggling, then the extent of impact for developing and poor countries is, I think, frankly, unimaginable, because they don't have the framework, the solutions, and response as well. So that's one question I feel that all of you should answer in terms of when you talk about climate catastrophes, their impact, their speed, how does that play into the urgency with which governments need to find a solution? Ma'am, let's start with you.
Thank you. I think you're absolutely right. I think the lived experience of climate emergencies helps people to understand why their governments need to take policy action now. And nowhere is that more evident, actually, than here in India, seeing the floods, the landslides in Kerala and in Odisha. So I think it is really helpful in driving that sense of urgency. And we know that matters not just in helping to build a global consensus for policy change, but also in helping people to invest in what they need for resilience. So we've been really proud, for example, to be a founder member, along with India, of CDRI, the Coalition for Disaster Resilient Infrastructure, which is helping to ensure that best practice from India is actually delivered in the Global South to ensure that infrastructure is built in a resilient way. And we know that is really good value for money. We know that every dollar invested in resilient infrastructure pays off 4 times over. So it is important and it is really urgent. We're also really proud of what the UK government is doing. I mean, my new government takes climate change incredibly seriously. It was one of the first speeches that our new Foreign Secretary gave, highlighting the importance and the urgency of the climate and nature crisis. And we were really proud, for example, that we've literally just closed the last UK coal-fired power station on our journey to carbon-free electricity by 2030.
All right, and you can watch more of that on our social media platforms, including on our YouTube channel. But turning back to the questions that we have, and we've got Priyanshu, who's got a question on Tata Consumer, as well as Tata Motors. Would you hold for a year is the question. I'm assuming that he has bought already. And Samir, from that perspective, would you hold on to a purchase of Tata Consumer, which has taken a bit of a battering in the recent past, and Tata Motors?
So yeah, let's talk about each one individually. Tata Consumer, we definitely hold on to, for the simple reason that we believe the consumer space in India is only going to keep growing. We're going to see Tata Consumer profitability increase as their product launches continue to increase, as their operating leverages play out. And then, of course, the Starbucks continues to roll out, where they have a sizable chunk, and the profitability from that angle keeps increasing. Simply giving an example, what happened in Trent, where Trent sold some amount of shares back to Inditex Group for the Zara shareholding, which leads to a huge cash flow. I think a similar situation could happen for Tata Consumer. So there is value unlocking opportunity as well. So we're quite positive. On Tata Motors, for the near term, we still remain a bit cautious. So we don't deny the fact that, look, the auto sales are slowing down in India, which is a slight bit of a negative. The festive season was supposed to be where things turned around, but that doesn't seem to be happening at this point of time, at least by the management commentary that we're getting from across the auto space, which can be a slight negative because that could hurt profitability targets, and valuations if Tata Motors are already a bit, I'll say on the fairer side, I won't say expensive. So, but what happens is when you are trading at fair valuation, your upside kind of to some extent gets gapped. We do believe the long-term opportunity for Tata Motors is extremely strong. So corrections would be great, buying opportunities. Like I said, small corrections of 2% like today don't matter. It needs to be a significant correction. So of course we corrected from the top. It went up to 1,100 odd levels and we're down to 900. So you've seen about a 20%, but also the run up, if you see, was quite significant. So I would like to say that closer to 750, 800 is where we have more comfort for buying from a longer term to generate decent returns, I would say, of 15 to 18% CAGR over a 3-year period.
All right, the next question is for, something that's really in focus today, that is Hyundai. And, Manthan is asking whether, so he's got an allotment, of course, and he's asking whether he should sell or keep holding the Hyundai stocks that he's been allotted. So, Samir, your view on Hyundai?
So if he had invested in the IPO, he obviously knew he was not going to get a major bounce. So obviously he's a long-term investor. Now, given that, I'm assuming he's a long-term investor. I'm talking on that angle. I do believe that Hyundai also will benefit from the growth that is going to happen in the auto industry in India over the next many years, 3 to 5 year period. I think sales in the auto segment can more than double over a period of time as we see a shift happening from bikes to cars. Hyundai caters to a varied segment of cars, I mean, from the entry level all the way to slightly higher premium SUVs. So they have got a good aspect of the Indian market, and as Indian market grows, they will continue to grow. They also have certain interesting launches coming up, which is the Creta EV. I believe, EV space is where maybe Maruti, the market leader, has missed out, and Hyundai can probably capture some market share, which is what Tata Motors is also doing, which we discussed a little earlier. So I again remain positive on Hyundai. Valuations are fair. The thing is, they came out with an IPO price which left nothing really on the table for investors to make money. And especially in a time where we are seeing sales slowing down a bit. So that's kind of adding on, building onto the pressure on the stock today. Of course, it's the IPO. But I think if you have a 2-year view, I think Hyundai can be something that you can invest in and get good returns. Now, if you ask me, is it the top pick in the space? Probably not. Tata Motors, for me, I think would be the top pick if it comes down to the 800 levels which you talked about. But Hyundai too could give good returns, so you can stay invested if you have a 2-year horizon. I think you will make good returns over a period of time. It may not be the top return, but you will get a good 14-15% CAGR.
14-15% CAGR is what you can expect. KNR Construction is the next counter that we're talking about. Halima has got this question. She's writing in from Bengaluru and she's looking for a short-term view. She's bought at 302 levels. The stock is trading very close to that mark, down about 3% in trade today. Swati, on the short-term charts, how does it look and would you hold on to it?
Yeah, Alex, the short-term chart is a little bit cautious only, but the interesting fact that is currently the stock is just hovering nearby support levels at around 295 levels, which is the previous swing supports levels. So if it's break that support level, then we're likely to witness some extension of this fall at least towards 270 levels. So up to that level, we might witness a sell-off in this particular counters. But the overall long-term horizon, if we look towards on a larger degree, definitely we are likely to witness a reversal from 270 to 280 levels back towards 350 levels. So if you're looking for a long-term horizon, definitely you can hold on this particular counter. For a short-term, my view is a little bit cautious. We might witness some more dips into this particular stock.
Before we move on to the next queries, Varun Beverages has come out with its Q2 earnings where net profit is up 22.4% at 629 crores versus that of 514 crores. Revenue is up 25% at 3658 crore versus that of 3266 crores. Let's also pull up the EBITDA if we can, and we will have the EBITDA numbers soon, but this looks like it is beaten estimates for Varun Beverages in terms of the Bloomberg estimates that we had in the morning, Alex. And it's interesting because yesterday, day before yesterday, when Tata Consumer came out with its numbers, their beverages segment got impacted because of Campa Cola. So it's
30% growth in EBITDA as well. And by the way, the stock has bounced from the low point of the day.
And
it is still
recovering.
down about 0.9% or so, but it has bounced from the low point of the day.
Right. So it's interesting that it's good numbers. And this is despite the kind of heavy rainfall we've seen, because generally these beverage companies don't post good growth when it's monsoons, because the demand goes down for a lot of these beverages. So it's good. In fact, the EBITDA margins have significantly improved to 31.5% from that 27% mark. So good set of numbers for Varun Beverages in Q2.
It's surprising that you say that. Of course, I would assume that beverage companies would, not all beverage companies, I would guess, chai makes sense, right? So you would consume more chai. But having said that, the RBI in its monthly bulletin also said that the heavy rainfall in August and September had a result of reducing the GDP growth of the country by 20 basis points. So it's not just the beverage companies that are facing the brunt of heavy rainfall, unseasonal heavy rainfall.
Right.
It is the rest of the country as well.
Absolutely. But moving on, let's take the next query. The next query is from Vishakha, who's from Bangalore. And she's asking, which defense stock should I buy today? This is because defense stocks are tanking today in trade. And she wants to understand whether she should buy the dips or not. Swati, I'll come to you for this one. Is this the right time to enter any of these defense stocks?
Yeah, as of now, we are witnessing some sort of a price correction in this particular counter. If you want to check into the quality counter, I believe HCL really looks very good on the technical front. Even though we are witnessing some correction from the last 3 to 6 months, but I believe this is the one counter one should definitely have into their portfolio on every dips. If you're looking for a fresh long positions, I will suggest to wait on. If you're getting any dips towards to 4200 levels, then definitely one can go for a long positions. For a longer term horizon, I'm looking for a target of at least 5,000 to 5,400 levels. So this is the one counter one should definitely go for a buy.
I like the pun that you just spun, Mahima, on this. Defense stocks are tanking. Let's talk about Birla Soft. 1,000 shares bought by Manoj in Rajasthan. He's bought at levels of 682 and he's wondering what to do. He's in a loss. Swati, on the charts, what is a strategy that you would employ? He's asking whether hold, average or sell at this juncture.
Alex, looking toward the market positions and the chart of the BSOFT, I will not suggest to average it out at the current levels, but there are the cluster support the counter has formed at around 560 levels. So as long as it sustains about that level, definitely we are likely to witness some sort of a reversal, or say the slowly and steadily we will see the upward momentum towards at least 640 to 650 levels. So I will suggest to hold on this particular counter, not to do any average it out at the current level, but we might witness some sort of a reversal from the current market price towards to 640 to 650 levels. So it's a hold from my end.
Right. The next question is from Shankar Prasad, who's from Karnataka, who's not from Karnataka, but he has a question on Karnataka Bank. Can we pull up the chart and see what is the price it's currently trading at? Because his question is very specific. So he's bought 500 shares and he's bought it at 250. Currently, the stock is trading at 212. So he wants to understand whether he should sell them right now and buy Union Bank or not. Samir, I'll come to you with this one. Fundamental view on whether he should sell Karnataka Bank and buy Union Bank?
So since he's asking specifically for Karnataka Bank, I don't think it's necessary for him to sell right now because the valuations are not so expensive, right? It's trading at about 0.7 times book value, about 7 times earnings. I think on the valuation front, it's quite comfortable. Where they are probably lacking about to some extent is on the growth. So if they are able to recapture some of that, I think it's okay. Would he want, if he is looking to make a shift, you know, there are better opportunities than a Union Bank. Union Bank is not one of the stocks that we recommend from a buying perspective because we are not as positive on that. If he's only looking for a PSU, I think Bank of Baroda would be the right PSU. If he's looking to make an investment from a 3-year horizon, you know, he said this ample number of times on a TV channel, IDFC First Bank remains our top choice in the space when it comes to small cap banks at the moment. For the simple reason of the arm that they have for loan growth and the fact that they've been able to grow their deposits faster and better than anyone else in the industry. And as they scale up, you know, the strong management led by Vaidyanathan will continue to do well. We believe there's a major re-rating possibility that can come up in IDFC First Bank. So if he's only looking at Union Bank, no, I would not recommend selling Karnataka and buying a Union. But if he's willing to go outside of the one that he's looking at, our top pick is IDFC First Bank in the private sector space and the overall banking space. And if he wants a PSU only, then Bank of Baroda would be a pick.
And we've got another question on Union Bank as well. I guess that answers that question as well, Samir, because you've specified what your picks are in the banking space. In the automotive space, relatively new listing, Ola Electric. It's been in the news for all the wrong reasons in the recent past. Service problems and after sales being a bit of an issue. We've got retired banker Rajan G. Iyer, who's writing in, and he's bought 103 shares at a price, he's bought 3,000 shares at a price of 103, and so therefore he's incurring a loss right now. So I mean, on the fundamentals, he says that he's not in a hurry, he's ready to wait 3 years. So from that perspective, do you think that the prospects are bright? And do you think that the issues that have been highlighted, which by the way, the company is written into the exchanges overnight to clarify that several of these issues have been addressed, do you think that it should be held on to?
Oh, absolutely. I think one should hold on to it. So if you go back a few times into when I've spoken on your channel, when the stock had run up all the way to 140, 150, we said that we would like to buy the stock closer to the IPO price of about 975. We're there, we're roughly there. So I would be recommending a buy on the stock actually. And I'll give you my reasoning very simply, that I believe the shift to electric vehicles is going to only accelerate going forward, and it'll be faster in the two-wheeler side given the affordability that is. Now, I don't deny the fact that the charges that are being made by consumers that, they've been dissatisfied with the vehicle on certain servicings and things like that. It's still a new product. It will take time for them to stabilize it. I mean, if you go back into history and see Tata Motors, when they launched their first car, they had a lot of teething issues, and then of course over time they improved. I believe a similar situation was there. But the kind of business model that they're building, where they're going to be manufacturing batteries, which will take some time, of course, to come up. But once all that comes up, I think they will be able to increase their margins and profitability, which is something which is missing at this point of time. Secondly, I would like to add on is that if you see that their sales market share is not going down, even though all these complaints are there, which means that obviously it's a small percentage of the overall sales that is having a problem, which they claim they have addressed, and hopefully they have. And if that is the case, then I think the stock can bounce back quite nicely. I would be recommending for this particular person, hold on, since you have a longer term view. It will take time for them to come to profitability, but when they do, I think there's a major re-rating. And if you haven't bought, if somebody hasn't bought, I would even advise them to go ahead and add on to the stock at this point of time.
All right, that's a fair point. Samir, Swati, we have to slip into a very quick break. Viewers as well. In the meanwhile, why don't you send us your questions on that number that you see on your screen? We'll be back on the other side to take more of your questions, so do stay tuned.
I would like to congratulate NDTV on its World Summit 2024. This morning, the Honorable Prime Minister inaugurated the session, and it was a very inspirational talk by our Prime Minister, talking about not just India's role on the world stage, but also how India can play a role in the entire humanity across the globe. How India's aspirations can be the global or the world's aspiration. I think Indians have taken a lot of pride in seeing how India has been built in the last 10 years. Watching Prime Minister extol the virtues of what has been achieved and what lays ahead for India and the world was truly inspirational.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome back. You're watching Ask Profit, a show where we answer all your stock related queries. Well, viewers who've just tuned in, you can ask all your stock related queries, whether they're fundamental or technical, on the number that is flashing on your screen. Just a clarification that, on the numbers of foreign beverages that we just discussed before the break, the margins are up at around 24% and not 31%. So just a clarification there.
But still
moving
good
on,
set of numbers.
Good set of numbers for sure. And the stock is kind of recovering, not done much, but kind of recovering. But yeah, moving on with the next query, and I'm going to dread taking this query, Alex, because it's from...
You'll get there.
Yeah, it's from Jaya Krishnan, who's from Kozhikode.
Very good.
Yeah, I pronounced it right this time. And his question is whether, is this the right time to enter Dixon and Polycab? If this is not the right time, then what is the entry level that one can consider for Dixon and Polycab for medium term? So Swati, I'll come to you for this one. Both Dixon and Polycab, how do they look on charts?
Both are trading near its overbought zone as of now. If you look towards the Polycab particular counter, in the last year, today it has given the breakdown of the short-term moving average, say the 50 and 100 DMA. So now I believe we might witness some sort of a sell-off, continuation of the sell-off towards at least 6,400 levels. So if you're looking for any long fresh positions, definitely any dips towards 6,400 can be a good level to take a buy call. Coming towards the Dixon, as of now, there is no major reversal sign as of now. The counter is trading in the pattern of the higher tops and higher bottom formations. But looking towards the markets, I believe we might witness some sort of a correction towards to 14,500, support provided by its 20 DMA. The past history shows that whenever the counter corrects, it takes the support of 20 DMA and again it's heading towards its new high. So any bottom up towards to 1400 or 1450 levels, definitely one can go for a long position, but not at the current market price.
All right. Very good, I must say that your pronunciation of Kozhikode has improved quite significantly. Yeah. PNB Housing is the next counter that we're talking about, and we're looking at holding this for a period of 1 year. Ankesh from Bengaluru is asking whether it can be bought at the current price for the next 1 year. The stock has done okay over the last 12 months in the context of, several other multi-baggers at 20%. There's nothing to write home about. Swati, from that perspective, would you say that it's a good buy from a one year perspective or better opportunities available?
Yeah, I'm not that much bullish on this particular stock if you're looking for PNB Housing. Why I'm saying that, because if we check on the weekly charts or the monthly chart, the stock was trading above nearby it's the higher time levels, and we are witnessing some sort of a correction from 1200 levels towards to 900. The stock is just breaking all the support levels of the previous, and now I believe it might see some extension of this fall towards to 800, 840 levels. So I will not suggest to take a fresh long position into this particular counter. If you're looking for a stock from this particular sector only, I will suggest go for the LIC Housing Finance. No wonder this counter is also witnessing some sort of a correction, but definitely for a longer term horizon, this stock will do the better performance compared to the PNB Housing.
The next question is from Murli, who's from Bengaluru, and his question is on SBI, and it bought it at 808 a piece. The quantity is not mentioned though, but he's asking whether he should hold on to SBI or not. Sameer, I'll come to you on this one. Should Murli hold on to SBI?
Yeah, for over a 1 year view, I don't think there's a problem to hold on to SBI. I think the growth opportunities are quite strong. I believe that, yes, in the near term, if you're a short-term investor, then you could see NIM pressure. So the next 3 to 6 months may not be as great for the fundamentals, the earnings that come out. But from a longer term perspective, we believe once the deposit rates start cooling down, which will take some time, and you see the corporate sector starting to borrow again, which will take some time given the fact that money is so freely available from the equities. Companies much rather raise money through the equity mode than through the debt mode. So for the time being, next 6 months could be a little tough, but if you have a 1 to 2 year horizon, I say hold on. There's value unlocking. SBI IMF may come up for a listing, so that could also add on to the thing. Stock has run up, no doubt, but if you have, like I said, a longer term view, you will make decent returns.
Interesting. Incidentally, Sameer, this morning we picked up a piece of information on State Bank of India, speaking of fundraising, that an AT1 bond, additional tier 1 bond issue is taking place by State Bank of India. 5,000 crore, which includes the green shoe option, is also something that is on the card. So we'll bring you updates as and when we get them. Certainly something that banks might start looking at again if State Bank of India is issuing an additional tier 1 bond. Shishir Biswas from Jamshedpur has got the next question. And incidentally, I did want to ask about HDFC Bank. So Shishir, thanks so much for saving me the trouble. Sameer, I'm curious what you say about HDFC Bank, because he's bought at an average price of 1,500 rupees per share, and which is a great buy price, I would think. You spoke about compressing NIMs and or net interest margins, which ultimately is going to be reflective of the profitability for those that are tuning in not familiar with the banking space. But we saw, if I remember correctly, 3.46% for the net interest margin for HDFC Bank. And they've managed to protect the downside for the net interest margin. Would you say, therefore, that operationally they've done better than you expected, and would you hold on to them?
So first off, to answer the question, I would definitely hold on. Second, so we were not expecting as much of a NIM compression for HDFC Bank for the simple reason that they already have a lot of high cost borrowing. So, when the merger between HDFC Bank and HDFC happened, HDFC actually had much higher cost borrowing than what HDFC Bank had. And over the next 2 years, as they continue to replace those old higher ticket loans with the banking funding, which is at a lower level, they may not go in for as much of a NIM compression as some of the other players will. I'm not saying that they will not go it, they have it, but it will not be as drastic because they had these slightly higher cost borrowings which are being replaced. So I'm not as negative when it comes to the NIM compression in the next 6 months for HDFC Bank as I am for some of the other banks. Having said all of that, valuations of HDFC Bank are still at probably the last 20-year lows. It's trading at about 2.2 times book, which is very, very attractive. I'm not compared to historical. I'm not saying it's attractive on an absolute basis. It's still fairly priced. But as the bank growth returns, as they continue to replace these high-cost fundings, which we talked about, I think the profitability for HDFC Bank will continue to grow. So I would stay invested. In fact, I would even recommend adding on more at any small dip.
Got it. The next query is from Devi Prasad, who's from Bengaluru again. And it's a quite detailed query that is asked, Alex. He's holding SBI cards since the IPO issue, and the issue price was at 755 a piece. And during lockdown, he's saying that it went down to 499, where he bought few more. But till date, SBI card hasn't given any bonus or share split. Rather, the share price stays near 700 or below. He's saying, should I sell or hold? And his stockbroker is suggesting that this will go to 900. But he's saying that given the ballooning credit exposure in non-payment cases, is it safe or not? So excellently detailed query and elaborated query is asked. I think, Sameer, I'll come to you with this one again because he wants a long-term view whether he should keep holding SBI card or not.
So my personal view is to hold on, but yes, what he rightfully said is there is a bit of stress in the credit card space. We've seen it not only we've seen it with Kotak Bank, we've seen it with the other RBL Bank that came out with results. We've seen that this part of the business, this non-secure part of the business is going through a bit of stress at this point in time. So SBI Cards, who pretty much is only doing this card business, could see their NPA spike, which could affect their profitability in the near term because they would need to make provisions for these, and these provisions can be quite large. Having said all of that, valuations are relatively not so bad. If you see, the stock has been a massive underperformer over the last, ever since its listing, it's down from where it was and it's really not ever bounced back. So it could probably go through a similar consolidation sideways movement for a little bit longer, maybe another 6 months. But if he has over a 1 to 2 year view, I think the stock will eventually rebound as collections will improve, as the economy starts seeing an uptick, as we see, the negative cycle from, the positive cycle coming in from a good monsoon, from the rebound in the rural segment and from the broader, from the entire space. I think there will be some benefits that come through. So maybe after 6 months, the stock will start performing. So hold on if you have patience.
Okay, Suman from Hyderabad has got a question on Cochin Shipyard, which Suman has bought at a price of 1,835. Should they continue to average or wait for it to stabilize? It's been under a little bit of pressure. It is currently under pressure as well. It's down 5% even as we speak. So Swati, on the basis of what you're seeing on the charts, what should the strategy be here?
Currently, the counter is down by almost 16% on a monthly basis as such. The counter also the interesting fact that it is just entering into the oversold zone. So downside, it might find a support nearby 1380 levels. Up to that level, you can hold on for this particular counter and average it out up to that levels. From there onwards, we might witness some sort of reversal only if the stocks manages to give the breakout of a 15-20 levels on the higher sides. Then only we can witness some sort of a reversal. But the overall, the trend as of now, it's down. We might see some sort of a reversal in the near future once it tests the support of a 1380 levels on the downside. So it's a hold to take a average it out. Any dips towards to 1380 levels, you can definitely buy the position.
Got it. Well, the next question is from Sudhakar, and his question is on Morpen Labs. Now, he's bought it at 86, and he wants to know the next target price from a short-term view. So, Swati, what should be the next target price for Morpen Labs?
In Morpen Lab, as of now, it is currently trading below the 20 DMA, which is the short-term moving averages. Positive momentum can be seen only if the stocks gives the breakout of 86 levels. Any move above that level will see some sort of a positive momentum towards to 94 to 100 levels. So at the current level, view is little bit cautious, but definitely positive momentum can be seen only above 87 levels.
Okay. Tanla Platforms is the next counter that we're talking about. We've got Ankit from Hyderabad who's writing in, who said that he's bought 800 shares at an average price of 1,100 rupees per share. Looking for a long-term view on the stock. The stock is currently trading significantly below the buy price and he's lost quite a bit of money. Samir, on the fundamentals, why is this not working? And what should... all right, we have to... apologies, Samir, I have to... avoid asking this question because there's an update coming in from the NDTV World Summit, and there's an interesting conversation, I'm told, that you should definitely pay attention to. Listen in.
Get an opportunity to capture what disruptive technology can do, but talk about, I think, the biggest talking point in living rooms right now, which is, aaj market mein kya ho raha hai?
So first of all, thank you so much for inviting. Do you want me to answer that question? Market mein kya ho raha hai?
Before we start, do people randomly come up to you and ask you, quick tip hai kya? Kya stock kharide? Because you run Grow?
People used to a lot, but then they got just so bored of our answers that now they have stopped asking those questions.
Okay, let's start with the story of Grow. Tell us, of course, you started in 2016. That was a time, markets have been in a bull run for a while, undoubtedly, but that was a time when I think online trading had not become as prevalent perhaps as today. Yes. What was the idea behind it, the thought process?
Got it. So we were working with Flipkart, and personally I started investing like when I was in second year of my college here in Bombay around 2000, 2001, right? So was really passionate about investing and found a good set of folks, three awesome co-founders, all were passionate about financial services and so on. And we saw that we were also lucky to see how e-commerce grew in India, right? Everything becoming online and so on. And then we looked at the penetration of, how many people are investing in India, mutual funds, stocks, and so on. And then we saw like on Nifty 50, the constituents of financial services is like very large part of everything. And in the hindsight, if I see a lot of dots connected, right? And there was this opportunity to kind of create a crazy big impact, leveraging our technology to reach out to like millions of customers, millions of people across India. So that was the starting point.
Did you expect this kind of a trajectory, or that there would be this huge quantum of Indians across, it's not just middle class Indians, everyone now has some equity exposure or the other. The boom has been immense. Did you expect that to happen, or do you think that that's something which came about in a post-COVID era? You were in the right place, right time to ride the wave.
So we were definitely lucky. And by the way, we are still like penetration-wise, we are still very, very low compared to...
Agreed. Relatively,
like,
relatively, I would say.
Yeah. So if we compare with 2016, right? Bunch of things played a very big role. Like, as you said, markets have been kind of very, very good. And then a lot of fundamental changes happened in India. And especially on the digital India side, like, Aadhaar KYC happened and UPI came and a lot of education started happening, a lot of campaign, mutual fund sahi hai and all, right? So there were some signals that, this wave, like this is a very, very kind of long-term wave and this is India's time and so on. Did we expect this much? I'm not sure, because we did not think too much like, where will be in 8 hours. I mean, of course there were plans and so on, but I think we were lucky, yeah.
Yeah, so right time, right place. Right now, there are also concerns, Lalit, about, so for example, futures and options or derivatives trading. All the regulators recently trying to clamp down a bit on the kind of retail participation. I just want to understand what is the kind of volumes you see on a platform like Grow? Have you seen a lot of interest or excitement about weekly futures and options, for example, and the impact that you see of that coming down?
You see, Grow is a kind of very broad-based platform. It has like number of products.
Sure.
We have mutual funds, stocks, and then of course derivatives. There are like 15 to 20% of our customers who do derivatives as well. And as you rightly said, like over last few years, the interest kind of is high, and regulator, as you again said, that regulator thinks about the customers, thinks about the investors, and kind of more or less aligned with our kind of thought process also, because what matters is the long term. How are people making money in the longer term and so on. And yeah, so
Do you have an impact on volumes, or do you see those customers moving somewhere else? And do you think that retail investors needed to have been protected from things like weekly options?
I think, there are certain things where customer protection is very, very important. So from that perspective, I think we are in the right direction. Your first question about will it impact? Of course it will impact, but how much? What will be the degree? I mean, your guess would be as good as mine or anybody, because there are a lot of second order, third order effects of any rule that comes into picture and any kind of change that happens, right? So we don't know about that, but of course there would be some impact. Yeah.
Give us a sense of the kind of growth we have seen in equity investment across India, and because you're at a position where you can get that expanse. It's not typically, it used to be maybe Mumbai, Gujarat, some pockets of the country where there were avid equity investors. That's not the case anymore, is it?
Yeah. So internet plus Aadhaar, UPI, like they have like lowered the kind of barriers like anything. And then folks like us came who made it very easy, very transparent, and a lot of education campaigns and so on. So earlier, as you are saying, like investing was limited to cities like Bombay, Bangalore, or some cities of Gujarat and so on, right? But now you go to any like tier 2, tier 3 town, a lot of customers today are coming from like smaller cities. Why? Because all the information arbitrage that was missing, like now it's available to everybody at their fingertips. You can open Grow app and see, what is a mutual fund, what is a stock, what are the related parameters about them, what is their fundamentals, what are technicals, like anything, whatever you want is available. So that's a big fundamental change that has happened, and I think it's not like relatively new. I think the long-term trend started around that 2015-16, and again, we were lucky to kind of start at the same time.
Yeah. Lalit, recently, I think you've had a big move. Our conversation and our context today is about the India century. And we have seen in the last few years, a lot of startups and young companies choosing to headquarter outside India for tax reasons, etc. We are seeing right now a trend of a ghar vapsi, in a sense. And your company is one of them that has now decided to move your headquarters out of US to India. So first of all, congratulations on that.
Thank you.
And tell us why.
You see, India, Grow is an Indian company. Customers are in India, management is in India, all operations are in India. So it did not make sense to kind of be outside India. We had to go, we were a YC company, so we had to register in the US, but now there is no reason why we should not be in India.
You had to pay more taxes to come back though.
Yeah, I think in long term, that's a price you pay. But in long term, I think it would be very good for us.
It's also paving the way to tap the equity markets. You're setting up for an IPO by coming back?
Maybe in some time, yeah. But yeah.
It's on the cards.
It's somewhere down the line, but we don't know when.
Okay. I'm trying to fish a headline out of you, Lalit, which you're attempting to avoid. But nevertheless, I'll go with somewhere down the line. So yes, the Indian equity investor is the center of all attention. IPOs are making, a huge inroad to investors, mutual funds as well. What do you think is the next big phase of growth? Will it continue to be mutual funds? Will it be IPOs? And will this confidence of investors sustain? Because we've seen in the cycle of equity markets in India that a bull run comes, one bad phase, and investors flee. Yeah. This time, do you think the things are different?
See, again, very hard to predict the future. We will come to know. On the next products, I think mutual fund is the most beautiful product for retail investors, at least, right? And then there's a lot of innovation that is going to happen there as well. Penetration is still very low. Like we compare ourselves with, let's say, 2016 or 2020 and so on. But if we compare with other countries, then it's still like very low. Like people are still kind of not beating inflation. Right, and retirement problem is still not solved, and so on. So there's like still long way to go, and I don't know whether there will be new products or not. But with existing products itself, I think there's kind of a lot of penetration. And that's where like companies like fintech, where the cost of serving customer is very low because of tech and everything, right? Where you can penetrate into kind of deeper sections of the country. Right, that's the big kind of innovation that is going to happen.
Yeah, but you're also in a very competitive space because the moat is low, right? Because the digital infrastructure exists. You have a fair number of platforms that make it very easy for you to invest at a click of a button on your phone while you're traveling. How does Grow aim to remain head and shoulders above or have a competitive edge?
See, the biggest thing about financial services is trust, right? You're compounding trust. And I mean, if you continue serving customer really well, if you continue kind of being on the side of the customer all the time and keep compounding that trust, I think that's the brand that you create. Or like if you look at all the financial services, large companies in India, why do we kind of go to them? Because they are trustworthy and they have very, very good service and so on, right? So, and it's very hard to do that, like continuously understanding customers' need. Like there is a saying in our product world where, customer need is always ahead of you and you are just running to kind of meet it. And my strong belief is that if you continue doing that, and other thing is like there's a big playground here. Like India is a big playground right now. Like India growth story is like multi-decade story is what like you have to believe, right? and and continue kind of building for the customer.
So what is the next big exciting announcement we're going to be hearing from Grow, or the next innovation that you're working on, Lalit?
See, I mean, I would be very happy to tell if we kind of work that way. But so the way we work is like we work on bunch of things, right? There are a lot of customer feedback that we keep getting. So we go out and meet customers. Like I personally travel across the country, meet customers in all the cities and so on, and then we invite customers and we come with like hundreds of ideas from those, and then we kind of keep churning them. So it's like more like an innovation factory than one big idea that I can announce here and tell this is going to happen. So it's kind of very boring under the hood, but then what comes out is like much more exciting for customers.
I think talking about customer feedback, is the daily volume of people complaining that their tech is glitching or their app is glitching, is that your biggest pain point? And not just for you, I think across the industry. Because every once in a while you see this Twitter trend or this X trend coming in. XYZ company glitch, my trade got stuck, I lost so much money, please refund. Is that a big problem that still needs to be sorted, even as 99% of the time things are working smoothly?
I think more important than is the customer love that we get every day. Like, of course, like when you're building something very kind of, tech-based and very high scale, there would be anomalies, but I think what gives us energy is the kind of positive feedback we keep getting every day. So it's unfortunate that all the negative things are pointed like much more, but like, I get like hundreds of emails per day, build this, or this is very good, and you should get this feature done. And customers are also very vocal. One beauty about building a product where customers care about you is like they are very vocal about what they want. So in general, in consumer product, it's very difficult to find what customers want, right? You will have to use various tools, but in our business, at least, that is like very, very, so we are grateful to customers in kind of, talking about all the things that they want on the platform.
But is the biggest area to work on for the industry as a whole on smoother transactions and more tech-enabled transactions? What is the next leg?
There's a lot of investment that is needed. See, infrastructure is very complicated. So like we have almost like 400 engineers working on just that, kind of getting things like very perfect, because it's about customers' hard-earned money. And that's like the promise, like reliability becomes the number one kind of item in your roadmap all the time, right? And rest everything is secondary.
Fantastic. Thank you so much, Lalit. This is truly an example of innovation driving a business that is growing, a hallmark of growing India. Thank you so much.
Thank you so much. Yeah.
At the NDTV World Summit, and looking forward to a conversation between two amazing investors, Mark Mobius, Ramesh Damani. Gentlemen, what are you planning to talk today? I would love to not be the fly on the wall, but be in the audience as well. Ramesh, you want to start? What are you looking forward to?
Sure. Thank you, Neeraj. Lovely to be here, of course, and it's such a great honor to be interviewing Mark. He's been variously called the Indiana Jones of emerging markets because he's always traveling, living out of a suitcase, but always discovering very exciting companies. So I want to ask him about two things, basically. First, what did John Templeton teach him? Because that was his first boss. And secondly, what does he feel about India? A few years ago, he was very bullish on India. Does he continue remaining bullish, or does he feel a bit let down now? I want to get his opinion on what is going on in India.
Yeah, we'll hear that in the interview, Mark, but quick 20 seconds. How do you feel about India? How do you feel about this summit?
I feel very bullish on India and continue to be bullish. As you know, it's been the last 5 years or more I've been bullish on India.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries. Shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching Earnings Edge here on NDTV Profit. I have with me Mr. N. Kamakodi, MD and CEO at City Union Bank. I'm Harsh Saita. First off, Mr. Kamakodi, the street enthused with regard to at least your growth numbers. 5% both sides of the balance sheet, advances as well as deposits. Just talk to us about what gives you the confidence in the current environment to go out and lend. You've done very, very well in this quarter where growth is concerned. And can that stay at that 4 to 5% sequential kind of run rate?
Over a decade or so, we had a consistent track record of about 15 to 17% growth rate of our book. But post-COVID, we had, let's say, a few years when the growth rate was actually lower compared to our earlier track record. So in that, actually, things started once again from the January when we could see the growth coming quarter after quarter, when for the June quarter, it crossed 10%, and now it is in the range of 12%. And our entire growth has purely come from our traditional areas of strength like the MSME, the commercial trading activities, agriculture, and gold loan. Even though we have expressed our desire to start the retail, probably like say the preparatory works are underway, and whatever growth we have achieved now is purely from our conventional areas, and new areas of growth, whatever we have identified, are yet to give their, let's say, contribution for the growth. So the track record, whatever we have seen, and also we started the exercise with the consultation of Boston Consulting Group to start the digital lending activities, where the decision making for the proposals less than 1.5 crore are being taken by the let's say, system almost to 70 to 80%. And that has also started improving the TAT, and it has started improving the capacity to handle things, which has helped us to take things to the next level. So we feel before the end of the current year, we should be, let's say, touching the industry level growth is what we expect at this point of time.
Okay, so by end of this year, roughly teens kind of growth, is that what one can expect? Maybe 13, 14% for full year FY25?
We refrain from giving any exact number, but what I can definitely say is that it will be touching the expected industry level growth before the end of the current year.
Okay, and with regard to margins, they've held up in an otherwise difficult environment when it comes to margins. Talk to us about what's happening. Are you doing higher yielding kind of lending, or what's helping your margins in this environment?
See, basically, like we had given our expectations that, like say, the margins will be at 3.6% plus or minus 10 basis point, and we are very well within that. Whatever expectations we shared with the market in the earlier quarters. Basically, like there were last year when the like say the rate of interest was increasing, like say we couldn't pass on certain like say rate hikes, which like say in fact had a certain impact last year. But this year, like say, since the decreasing interest rate scenario got delayed by like say a few months, if not few quarters, that has helped us to stabilize our net interest margin. Particularly, we are able to have better bargaining power in the new businesses we are booking to.
Okay, and do you believe credit costs have now peaked? You're past the cycle when it comes to credit costs. Your provisions number is half of what it was same time last year for first half of this year.
Yeah, basically, if you had a chance to look into the past strength, year before last, we had about 1,200 crore plus slippage, which moderated to about around 1,000 crores for the last financial year. And this year, we expect it will further come down by about, like say, come down by 200 crore to about 800 crore. And also, you may also find that the total recoveries, the recoveries from the live NPA accounts and the technically written off accounts are much ahead of the incremental slippages, which has helped us in seeing the reduced margin, like provisions, and also the gross and net NPA numbers coming down in the successive quarters.
And do you therefore, what is it that you believe will be the kind of provisions credit cost number for this year in your opinion for FY25?
See, we don't normally go by such an estimate, but what we clearly say is that since the recovery numbers are more than the slippage numbers, incrementally the reversed provision will itself take care of the incremental provision requirements, and whatever extra provisions you make, that depends upon what is the targeted net NPA we would like to have, and these sort of decisions we will take it on an ongoing basis. So the point what that needs to be understood is that like the slippage numbers have come lower than the total recoveries from both live and technically written off NPAs put together, because over 90% of our, maybe even 95% of our total loan book is fully secured with, to greater extent, with the immovable collateral, and our recoveries from the NPA account percentage and all are, like say, we are able to recover about, like say, around 70 to 80% of the slippage amount at the portfolio level. So the incremental, like say, the recoveries, since they are more than the additions, we are very safe in that.
Got your point. And when does ROA therefore start to inch up? Do you believe this is that year where you'll see an inch up with regard to ROAs? Where do you exit FY25? What kind of an ROA number?
We had, for like say, multiple decades, we had our average return on assets around 1.5% plus or minus, and we are back at that level after 2 to 3 years of COVID impact, and that ROA numbers are very well stabilized, and we should be able to have this ROA level, current ROA level is what we expect.
Okay, and do you believe that FY26 you'll grow faster than the system?
We are working for that, and since we expect some amount of incremental growth contribution will come from the new areas like secured retail and which we are planning to start, probably our growth rate we can definitely aspire and like say see getting more than about the industry level is what the visibility we are having currently now.
Okay, so that turnaround visible. With regard to your NPA ratios, you said that at least your provisioning for this year will largely be zero except the adjustments to net NPA. So what's the kind of GNPA and NPA targets broadly that you have? I'm sure that there's likely going to be internal discussions even going forward, but broadly, what are those aspirational numbers that you will be looking at?
We hope on the current trend, we should be closing the current financial year between 1 and 1.25%, 1 to 1.25% net NPA is what we expect at the current point of time.
Understood. So another maybe 0.5-ish% kind of reduction or 50 bips reduction with regard to where net NPAs is concerned. Is that fair to expect?
Yeah, from the current level of 1.62, you have 37 bips will take you to 1.25%, and more reduction will probably get you somewhere. The minimum reduction has to be, like say, the 37 bips.
Okay, 37 bips minimum. Okay, and with regard to your loan book, I believe largely secured, so you're not seeing any fresh delinquencies, no stress from unsecured?
We don't have much unsecured, like say, like all our core business to greater extent is through the secured book, and that is because of that, like say, consistently we have higher recoveries from the slippages.
Right, and could you give us that component, the mix for secured versus unsecured in your book?
Yeah, like say the almost 95% plus percentage of our loan book is secured.
Understood. And therefore, from the unsecured side of things, are you seeing absolutely any pressure?
So far, no.
Understood. Okay. And asset quality, you believe even through this cycle will hold up? You're seeing some bit of stress in the system as a whole. You're not seeing it on your balance sheet yet. You are expecting that that will not reverse for you, right?
Yeah, fortunately, like say, when post-COVID, when the cycle started, you had, like say, significant increase in the loan book of the banking sector came from the unsecured retail credit. We were not in that segment at all. Because of that, okay, we had to, like say, face a certain amount of reduced growth. But nevertheless, when the tide turns on the opposite side, we are relatively safe. And since we don't have much unsecured portion, particularly the consumption type retail, right from the beginning, our focus had been in the funding for the, like say, I mean, mainly secured portfolio and funding for the creation of business assets, which had taken us so far. And in this asset quality issues in the unsecured front, we don't have much to complain about.
Got it. And with regard to your deposit side, what's the kind of growth number you would expect or aspire for? You have a healthy loan to deposit, I don't deny that, but you don't want it to get too far ahead as well. So how are you playing that? How are you playing things on the deposit side?
That's right. Like say, we feel and we continuously work that the deposits will not be a constraint for the credit growth, whatever we try to achieve. Is what we have as the rule, and we are going ahead with that focus.
Right, and what's helping you hold on to cost of deposits? Because it's not gone up substantially. It's gone up by maybe 20-30 bips over the last year or so. Do you believe all the repricing is done for you, or do you believe some bit of repricing still in the pipeline?
To greater extent, the repricing is over. And as you are expecting, like say, you have reached the fag end of the increasing interest rate cycle, and only the time of beginning of the decreasing interest rate cycle is getting debated. We think we are perhaps almost reached the like say peak level of the deposit cost for it.
Right, and of course you've alluded to the fact that we are likely going to see rate cuts going forward. Impact of that on your margins, if any, or you see a very marginal impact on your numbers on the back, if that were to translate?
Definitely, you will see when the interest rate increases, there will be expansion in margin, and when the interest rate decreases, there will be, let's say, some amount of impact. But one thing what you have to keep in mind is that if the rate of decrease in the, let's say, interest rate is slow and steady, probably that impact will not be, let's say, fast. So the both the yield on advances and cost of deposits will match. So we hope the decrease in the rate of, let's say, the rate of rate cuts, when they happen, if they happen in a slow and steady fashion, by and large, the incremental impact on the margin should be minimal.
Okay, Mr. Kamakodi, great getting perspective. Thank you so much for coming in, speaking with us. Let's pull up the City Union Bank stock chart, because intraday it's flying away in trade. Many congratulations on a solid quarter, at least this time around. If we can pull up City Union Bank, kind of reflective of how the numbers have been. There you go, 14.5% now on City Union Bank. But first off, let me bring in Rucha Somaya as well, who's joining us on this show. And with us, we have Mr. Ashish Rai, who's the CEO at Orion Pro Solutions, to talk to us about the Q2 numbers. Mr. Rai, just talk to us about margins, because EBITDA not growing in line with top line. Give us perspective on what's happening.
Yeah, so look, I think my guidance of this while, Harsh, has been we'll have revenue growth between 30 and 35, EBITDA between 20 and 22, PAT between 15 and 16. I think EBITDA is between 20 and 22, came down a point. PAT is slightly above 16, so slightly above guidance. I think it not sort of emphasize too much from one quarter to the next. The reason we give a wide band is the numbers will keep on moving at the pace at which we are growing, the pace at which we are investing in the product, the pace at which we are expanding the markets. It's very hard to calibrate that point. I know people look at it. This specific quarter, I think we had a forex loss, which basically cost about a point on the EBITDA in one of its subsidiaries, about 4 odd crores. So that does move the number a bit, but by and large, I would not read much into a movement. It's a solid quarter. The revenue continues to grow, and we continue to deliver.
Right. Thanks for that, Mr. Rai. This is Rucha Somaya joining in. Can you tell us more about the margin walk? I can see that the change in inventories is what has hit the margin. Also, employee benefit expenses are a tad higher as a percentage of revenue than the last quarter. So how do you expect this to move in the second half of FY25?
Yeah, that's a very, very good question, Rucha. Thanks for that. So look, I think for us right now, the main focus of the enterprise is how do we capitalize on the demand environment in front of us. The demand environment has been really very, very strong. The question is, how do you capitalize on it? And which means we will continue to put some product build outs ahead of revenue. So the way the product business usually operates is you need to invest a fair amount of capital upfront to get ready if you're getting into new markets. So our core product build outs are by and large done, but there is a lot of incremental build around making the stack AI enabled or AI native, depending on what the strategy is, as well as getting market ready where we are succeeding. So we expand into Middle East, we expand into Southeast Asia, and there's a lot of market readiness to be done. So that sort of points to the R&D spend, which we expense out, and that is where the employee spend has been increasing. So you'll always have to keep investing a little bit ahead of revenue. So I think that's where the sort of movement has come in, right? I think we are not very intensive as an organization, but we do need to build up scale. We're now at 2,500 plus. We expanded the R&D setup quite significantly over the last, I would say, 3 quarters, and that will climb up a bit. But then, the revenue will also keep climbing up. So, by and large, that's the picture.
Got it. So, Ashish, a couple of quick ones on margins before I close that out. So, 20 to 22%, is that the band we can expect margins to be in? Because you've consistently been there. Couple of quarters, 23, but otherwise, 20 to 22% is largely the band we can expect you to be in?
Yeah, so Harsh, and probably I'll spend just a bit that comes in, right? So we will stick to that band. And we found that to be the right band, because when you're growing at 30, 35%, parts of the business are growing at 50%, it's hard to calibrate margin down to a very fine point. The second is the philosophy of the organization, right? So unlike a services setup where revenue is just a function of people, the products and platforms business that we are in, we do need to invest a lot of capital to build the products out. We expense this R&D that is right now running at slightly above 9% of the top line, right? And that the commitment we have to the investors, or rather the guidance that we have, is we'll keep EBITDAs between 20 and 22. As the products scale up, obviously operating leverage comes in and the margins improve. We'll pour this excess back into the R&D spend, because right now, at least for the next 3-4 years, the focus still is getting new products out, capitalize on the demand in front of us. We'll probably have very, very strong demand the next 5-7 years. So this is the time to step up and not really try to increase the EBITDAs too much. But between 20 and 22, we feel confident about keeping it for quite some time.
Ashish, I believe there's a problem with bandwidth. I'm going to quickly have someone check on that and maybe take a minute or two to do that. But while we're at it, I'm just going to quickly look at Orion Pro's numbers. They're guiding for a 30+% growth, Rucha. This is a company which is trading at trailing 12 months, 55 times in terms of earnings, with a 30% kind of growth trajectory, committing to a 20 to 22% kind of band where margins will be at.
Right.
So valuations will likely, maybe 2 years forward, start to look much better than what they currently are at. But just talk to us about product suite. What is Orion Pro doing in terms of expanding product suite? He's talking about R&D.
Right.
I'm curious to know.
Right. So Harsh, basically overall this company has two verticals. Number one is the sale of software services, which contributes around 68% of the company's revenue. And the next part of it is the sale of equipment and product license, which contributes the balance around 30% of the total revenue. Now the focus of the company is to expand the software services, and this time the margin in this vertical has come down a tad at 79% versus 84% same time last year, whereas sale of equipment and products license, which contributes a lower share of the revenue, has actually expanded in margin. It came in at 37% versus 32% last year. But we'll see what Mr. Rai has to talk to us about this one. But Harsh, if we look at the stock price performance, I mean, the company has really done well. It has given 125% returns over the last 1 year. Now, you talk to us about the valuation of the company. Do you think an investor should get into this, or what are your thoughts on this one?
Yeah, so I mean, of course, we'll have to understand from Mr. Rai as to how long can this 30% kind of growth run rate continue. Trailing 12 months, they're doing around 1,000 crore of revenue, around 215 odd crore of EBITDA, which is roughly at 21.5%. If they grow at 30%, this will likely also continue to grow at roughly 30 to 40%. It's a roughly 10,000 crore in market cap. It's trading at roughly 4 to 5 times EBITDA current, and likely that will, 40 to 50 times EBITDA current and 55 times earnings trailing 12 months. That's how I'd break it up. Not sure if we have Mr. Rai back. Stock is obviously down 5%. Okay. Ashish, if I can ask you, you've guided for a 30% growth in FY25. What I want to know is, demand traction is strong. How long can you grow at 30% for?
Yeah, so Harsh, for quite some time, we think, we pivoted away from what was a fairly diversified IT services style model 4 years back into building out a global products and platforms player that can really play on the global stage, right? The dream was to build out a really mature enterprise technology business rooted in India. So we selected a few segments where we will operate. These segments, we were confident, have a demand runway going 5, 7, 10 years out, because there is something fundamentally transformative happening in those spaces, right? And that's why we feel so strongly about the demand environment, whether it's transformation on the corporate banking side, which is 55% of our revenues. We've got very mature products in lending, in transaction banking, where we see the banks continue to move away from their custom software builds into a mature global product. Whether it's transit payments, again, very strong demand because we feel over the next 5-7 years, the entire world will move away from closed loop payments to open loop payments, where we have a cutting edge stack, very successful in US, very successful in Central America, now moving into Europe, right? So each of these spaces, data center space in India, again, unprecedented demand, enterprise AI, we feel is a very, very large opportunity over the long run. So we selected these spaces because we knew there is something fundamentally transformative happening in that space, which creates that demand. So I think for the next 5-7 years out, we do see a very strong demand runway ahead. We painted a vision 20-30 4 years back for ourselves. We want to be a top 3 global player in each of these spaces. We're still a fairly small player. These are all double-digit billion-dollar spaces. So we feel very, very good. We have to focus on the product. We have to focus on the technology, make sure we build out tier 1 products that can compete globally. I don't think demand is an issue.
Okay. So demand is not an issue and AI is another next opportunity for you. But let me talk to you about the segment and highlights quickly. Well, the sale of software services where, 68% of your revenue comes in, dropped down a little bit in terms of margin, whereas the 30% of the side, that is the product license side, actually improved in terms of margin. So what kind of segmental mix do you see going ahead in second half, number one? And number two is, what kind of new product launches are you looking forward to in the second half of FY25?
Okay, yeah. So I think I would not read too much into the services versus licensing revenue from one quarter to the next, because most of the services that we do are also around the products that we sell, right? So I think it's a question of revenue classification, but because the order book has been very, very strong, because we won a number of new deals, when we win the deals, licensing revenue is a little bit more, and then the implementation revenues kick in, and then the support revenues kick in after that, right? So I think the mix will change from one quarter to the next. I do not think that makes a lot of difference from a margin profile standpoint. Of course, the steady state AMC revenues are very high margin, and while you're enabling the customer, you're low, but it sort of evens out over a period of time, right? So I think, sorry, I missed your second question, Rucha. Can you ask that again?
Yeah. What kind of new products are you looking forward to?
Yeah. So look, I think for us, the single biggest investment we are making right now is enterprise AI, right? So we feel, of course, there's a lot of sound bites around frontier models and LLMs and all, and we'll see where that game goes. But we feel as any technology matures, a bulk of the value creation happens on the application layer, and hence bulk of the value capture for vendors like us happens there. We are already a very mature enterprise application house, right? We did an acquisition for Arya.ai, which is probably one of the strongest enterprise AI teams exclusively focused on banking and financial services world, doing it for 10 years, right? We are bringing together our enterprise application stack together with the ML capabilities, AI capabilities that Arya.ai brings into very, very mature offerings. A lot of the wins that we've announced recently over the last 3 months actually have been on stacks which have been AI enabled, right? So transaction banking, for example, we're bringing in more and more use cases around, right? So ultimately, I think a lot of where the banks use technology, right? I mean, they're using our applications, mission critical applications to run their business processes. That is where the value gets created. And that is where we are making a lot of investments around new product launches. The entire Orient Pro stack will be AI native pretty much in terms of the application stack going out.
Right. Right, Ashish, pleasure chatting. Of course, larger chat warranted, very interesting space. We look out for this one, of course, but good luck for Q3 and beyond.
Thank you, Harsh. Thank you.
But let's immediately cut across. We have Kunal Bell speaking at the NDTV World Summit. Listen in.
Why are we obsessed with 8,300 crores? Why are we obsessed with a currency that is obviously not ours? We generate revenues and profits in Indian rupees, not in dollars. And a mythical figure. If you think about it, like, it doesn't make any sense. Rather, isn't it better we build businesses with the intention of making them lasting and enduring and aim for goals which enable us to get there? So 100 crore revenue business which is profitable. Because the moment a company becomes 100 crores in revenue and is profit making, it is very likely it's not going to go out of business, right? And will keep going from strength to strength. And what India probably needs right now is not 100 or 200 or 300 unicorns or 500 unicorns. We need 10,000 Indicons, because that will form the bedrock of the startup ecosystem.
Right.
And that will create the steady flow of companies that eventually become listed companies and large businesses.
As you explain that fundamental, and it's a fascinating concept, but it's also an attitudinal expression, right? Like yesterday we had the Prime Minister here speaking about AI is not just for artificial intelligence, but aspirational India as well. When you come up with jargons and terms which are local in nature and something that's homegrown, it also reflects that aspiration.
No, absolutely. I think the Prime Minister has made an indelible contribution to the startup economy. When I started my startup journey, I was 23 years old in 2007. There was nothing known as a startup. There was no nomenclature called a startup, however strange that may seem right now. You either did a business or you did a job, right? And the business was typically the one you inherited or you joined your parents' business. There was nothing sitting in the seemingly twilight zone of this is not your family business and it is also not a job. There was no word for it. Imagine. Startup came into national parlance only around 2015 when the Startup India initiative was evangelized and launched by the Honorable Prime Minister. And because of that, startups gained legitimacy. They gained recognition. Suddenly parents in small towns were not aghast the moment their 23-year-old child who went to IIT after a lot of struggle by the parents saying, I will not join McKinsey or Goldman Sachs or Microsoft or Google, and I'm going to start something and I'm going to make zero money for the next few years, and likely we are going to be in debt during that period. They were no longer aghast at that. And that contribution, I think, significantly goes to the Prime Minister and obviously the role models that have now become available to the younger generation of founders.
And for instance, I was wanting to ask you, when you come up with a term like snap deal, it's again something that's inspired. You studied in the US and it's inspired by that, the American influence. Over the last, let's say 15 years, what's changed at that psychological level? I mean, is it the American influenced or American educated or one who's gone abroad, who's come back here? I come from Bangalore, where you have most in the startup world speaking with an accent. Is that changing really in terms of how Indian homegrown startups are seeing themselves?
What has really changed over the last...
I think it's a brilliant session because if India doesn't start disrupting the rest of the world and showing the Indian way to innovate, I think we've lost an opportunity. And with the world in a crisis in terms of what's happening with geopolitics, with what's happening with health, I think this is the right time for us to come together with disruptive innovation. And I think that healthcare has a major role to play there.
In a world of shifting power dynamics, India stands tall as a global force. Join us at the NDTV World Summit 2024, where Prime Minister Narendra Modi will unveil his transformative vision for the India century. Be a part of a summit of thought leaders and visionaries, shaping the world's future. NDTV World Summit, October 21st and 22nd on the NDTV network.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
In a world of shifting power dynamics, India stands tall as a global force.
Markets are near the day's high as heavyweights RIL and HDFC drag. Broader markets underperformed, small cap registers big gains. All sectoral indices trade with deep cuts, with Realty and PSU banks leading the fall. During his address at the NDTV World Summit, Prime Minister Narendra Modi acknowledged investor Mark Mobius's vision for India. Later, Mobius expressed his deep affection for India, praised Modi's vision of digital India. Prime Minister Narendra Modi is en route to Russia for the 16th BRICS summit in Kazan. Beyond the summit's formal agenda, all eyes will be on Modi as he holds a key bilateral meeting with global leaders discussing everything from trade ties to climate change. It was a muted start for India's biggest IPO. Despite the buzz, Hyundai Motors debuted at 1,934 rupees on Dalal Street at a discount to issue price by 1.3%. Paytm's earnings results are out and they reveal a net profit of rupees 930 crore for the July-September quarter, surpassing expectations. However, the stock tumbled 5% as the profit was largely attributed to a one-time gain from divesting its ticketing business to Zomato. Hello and welcome. You're watching Market IQ. I am Himakshi Bahuguna, and let's take a quick look at the markets first. The benchmarks are near day's low, with Nifty below 24,600 and the Sensex above 80,600. The broader markets are underperforming benchmarks today, with the Midcap index losing 1.8% and the small cap index falling over 2.8%. The market breadth is skewed today towards declines, with the advanced decline ratio being 10:40. Nearly all sectoral indices are trading with losses today, with Realty and PSU banks leading the fall, followed by auto, media and metals. Nifty IT is marginally in the green. Speaking of the Nifty losers, Adani Enterprises, BAL and M&M's SBI are the top losers, whereas ICICI Bank, Nestle India and Ultratech are seeing some gains. Gautam Adani-owned Ambuja Cement acquires Orient Cement for 81,000 crore to expand pan-India share. The acquisition will add 16.6 million tons to Ambuja's annual capacity and will be funded via internal accruals. My colleague Mihika joins in with all the details.
So the update came in this morning, and Ambuja Cement will acquire 46.8% in Orient Cement, and the acquisition value is at 8,100 crores. Now the transaction will be funded entirely via internal accruals of the company, and they'll be making an open offer at 295 rupees per share, which is at a premium of Orient's yesterday's close, and this will trigger 26% acquisition of public shareholding, and it will this acquisition will add 16.6 MTPA of capacity for Ambuja, and acquisition will help Adani Cement as a whole to take its operational capacity to 97.4 MTPA. A little bit about the deal valuations. Well, if you take it at operational cement, just the 8.5 million tons which is currently on stream, the valuations come around $114 per ton. But when you talk about even the planned capacity, that's at $58 per ton, and both these values are lower than the greenfield setup cost of $110 to $120 per ton. A little bit about Orient Cement. Well, current cement capacity is at 8.5 MTPA. They have also ready to implement capacity at 8.1 MTPA, which was taken in the deal valuation calculations. Clinker capacity is at 5.6 MTPA, and the potential cement and clinker new capacity stands at 6 and 4 respectively, and they have presence across Telangana, Karnataka and Maharashtra. Now, when you talk about the benefits for Ambuja Cement, well, the acquisition will help Ambuja Cement increase its presence in South and West India. It will increase its pan-India market share by 2% additionally. And Orient also has large size, high quality limestone deposits at Chittorgarh to support capacity in northern India, which is around 6 MTPA. And the acquisition will improve the overall return on capital employed for Ambuja. When you look at it from Orient Cement's perspective, well, the opportunity will improve operational efficiency via a higher green power mix and domestic coal linkages. It will also help in clinker cost reduction potential of around 150 rupees per ton, which is positive for the company's margins, and it also helps them achieve their target EBITDA per ton of 1,500 rupees by FY28.
Moving on, Paytm reports over 900 crore profit in Q2 on gains from ticketing business sale. The revenue for the same period dropped 34% on an year-on-year basis. My colleague Harsh joins us with more.
Well, YY, of course, revenue is lower, but when you're looking at it sequentially, revenues are up 10% on a QOQ basis, which is definitely a plus, because what you're likely going to see is we've seen the bottom in terms of the revenue decline in Q1 of FY25. So that's the key positive which I take from this. The 10% rise at 1650 odd crore in terms of top line, 1660 crore is where the top line number came, is largely in line with what even the street was anticipating, what analysts were anticipating. But the real number is that EBITDA number, which has come in sharply better than expected. The EBITDA loss has come in at 403 crore versus the expectation of 475 crore in terms of the EBITDA loss. Even your net profit, of course, is 930 crore. Let me break that down because some exceptional items there. 1345 crore is the gains coming in from the sale of ticketing business to Zomato. If I exclude that, your profit after tax is actually a loss of roughly 415 crore. The loss number was expected to be a higher 630 crore, and therefore a very strong beat coming in terms of the numbers themselves. But that's not the only thing that's come out when Paytm is concerned. You've also had a release which is coming through where the board has considered to give loans or grant loans with a default loss guarantee. They believe that this will accelerate loan growth for Paytm, and that's probably what's also causing a little bit of disappointment on the counter, because earlier they never used to give default guarantees on the loans that they were giving out. Now, of course, they will do that. What the mechanics will come out as part of the earnings. So we'll have to wait and watch, or rather as part of the commentary post the earnings, which have now come out. So commentary awaited. We'll try and wait and watch as to how that plays out. Currently, the company is providing a default loss guarantee of roughly 225 crore. It's a one-time amount which the company is going to provide for one specific lending partner.
Yeah, thanks Harsh for that. Now City Union Bank zooms after reporting the asset quality improves sharply in Q2. My colleague Vishwanath Nair joins in with the key highlights.
Right, so the City Union Bank shares were up about 14% a little while ago when I was checking. Actually, it's dropped since then, but still in the 12 to 13% range, primarily because of a very strong set of numbers. If you look at the profit number, actually, it's not really that good. The profit growth is only about 2% but the true, impact on or the true benefit for City Union Bank is coming through on the asset quality front. That's a 34 basis points quarter-on-quarter reduction in gross NPA as well as net NPAs, which have improved about 25 basis points on a sequential basis. So that's a pretty strong set of numbers that are coming in from City Union Bank. The other part of the results which looked positive was the fact that net interest margin is about 13 basis points sequentially, and that's a sight for sore eyes in the current environment where most banks are actually reporting either flat net interest margins or slightly lower net interest margins. So there, the bank has performed better. This is primarily being led by a higher loan growth than deposit growth. Deposit growth is about 9% compared to loan growth about 12%. So that's obviously helping the bank post good numbers for this quarter. According to what analysts believe, the growth engine has started now for City Union Bank, and going ahead, things are only likely to improve with return on assets as well as return on investments looking much stronger than what they were in the last few quarters. We will need to see what exactly Q3 for the bank looks like, because that's when the rest of the banks will start catching up. If things remain